This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have
breaking news.
Yo, what is up, everybody? Happy Wednesday. Welcome to Benzinga Live. Spencer Israel, Aaron Bree. Aaron, I noticed you called today's show is Bitcoin about to crash. We probably could have called this show a dozen different things, and it would have been irrelevant.
Yeah, I felt like, the obvious thing would have been to make it about CPI and inflation, but I feel like, we've talked about that enough. And one of the most interesting things, when we will talk about the CPI print this morning and inflation in general, one of the most interesting things to me was actually Bitcoin and other coins price movement off that news.
There's so much to talk about today, okay? Bitcoin. We're going to talk about that, as Aaron just said, and as the title of this show suggests. Yes, who's in the chat? Darren, yes, we will talk about Luna. We have an article at Benzinga that called this the Lehman Brothers of crypto. I love it.
I think there's probably a lot of Lehman Brothers of crypto.
There's more than one. Luna it still is. It still is a cryptocurrency. Luna and its corresponding stablecoin Terra USD have crashed. We will talk about that. We will talk about inflation. We will talk about the market is just being totally bipolar today. If I pull up a chart of just the SPY, just go super basic on you. All right, now I go to a 15-minute chart and I bring it up on the screen. Look at this chart today. Let me zoom way in here. Now let's do a 1-minute chart. It's even more fun. No, 15 minutes is better. All right, look at this. We drop precipitously. It's my SAT word of the day. Precipitously at 8:30 a.m. on the headline CPI number. Inflation in April came in just a little bit above estimates. And then, never mind. At like 9 a.m., we just decided to start buying and buying. We actually gained all those losses back by an hour ago. We had gotten back to where we were pre-CPI number at 8:30 this morning. Does any of this make sense? Probably not. It's just the market doing what the market does, right? It's overreacting to things in the short term. I do struggle with wearing multiple hats at the same time, wearing my investor hat, wearing my short-term hat. And I think it's important in this market, Aaron, to have the long-term hat on more than the short-term hat.
You'll hear that in market dips like this, Spencer, that, if you're younger, this is the time you want to be accumulating anyway. And it makes sense, right? If say Apple's stock drops from 150 to 100, I'd be able to afford more Apple shares at 100 than I would at 150. And in 10, 15 years, is it going to make a difference where I got the shares at or just how many shares I have? For people right now that are like closer to retirement, I'm sure this is more worrisome, seeing like 20% of your retirement portfolio, if you were all in equities and like no bonds, or say you were half and half. So if your stock part went down 20% and your bond part went down 3%, you're effectively down 11.5%. It's not good when you're trying to meet that date. So for younger people that are more in your accumulation phase, like, look.
Ooh, accumulation phase, using a fancy term there.
Yeah, keep. By
the way, you're going with the glasses look today.
I am.
Going with the smart look. I dig it.
I am.
Looking good, man.
Yeah, we're trying to
Oh yeah, look at those glasses. Look at those specs.
Yeah.
He's pulling it off. Some of us need glasses to live, others just wear them because they make us look good.
Well, these are also blue light glasses, Spencer. So I'm looking at two screens right now.
I see.
But yeah, I do.
Bree got a lot smarter with glasses. Bree's going to be a lot smarter today than he was yesterday.
Yeah.
Tell you that.
I actually had tried that in college once.
Did it work?
Well, I was like, oh, maybe my professors will like take me more seriously if I wear glasses to class. And I maybe they were blue light glasses, maybe they were just like legitimately like fake glasses off of Amazon that I ordered, like whatever, $15. And I remember I walked in like to my buddy's room where where a bunch of like my friends were like sitting on the couch playing video games or whatever, like wearing my glasses. Maybe I was smiling a little bit. And I just like walk in the door. My friend who like actually wears glasses, first thing he says, he's like, "Those are fake." I was just like, "What?"
Well, dude, so I also had a friend, and I won't name him, but his name rhymes with Ray. I grew up with him, and he tried to convince me one day, like he's just started wearing glasses out of the blue.
Yeah, that's what I basically tried to do.
And he tried to convince me. He was like, "No, I need these." And I was like, "Really?" He's like, "Yeah." And he did it. This went on for like weeks, and I was like, "Those aren't real." He's like, "Yes, they are." He insisted. Then they weren't real, and he was wearing it. And then I was like, "Wait a minute, are glasses cool now?"
See, mine was.
This is like in like 2009.
Yeah, it's one of those things where like it's always cool if you don't, like there were kids in like 6th grade that wanted braces because everyone else had braces. You know what I'm saying? And like.
I've never heard that before.
No, that was a thing. I swear,
that's a thing?
I swear to God. Yeah, you like were left out. Like everyone in middle school had braces, and if you were left out,
the
like,
cool kids had palate expanders and braces.
if you went to lunch without braces, they were like, making fun of you. Like, oh, your parents can't afford braces. Go. No, I'm just kidding.
Kids are mean.
That'd be mean.
Oh my gosh.
But no, my thing was similar to your friend in college, except for mine lasted literally about a day.
Oh, this lasted for weeks.
I got found out.
Like
the
right
glasses were fake. I don't think the professors believed it. But yeah.
Yeah. So by the way, if I do sound congested, it's because it's allergy season here at Benzinga. The pollen is out. So I apologize if that is making me sound weird. But no, I don't have COVID because I checked. And I'm good to go for tomorrow. You and I. Well, actually, I'm going tonight. You're going tomorrow. You and I are going to Vegas. This will be our last show of the week because Aaron and I will be in Vegas starting tomorrow for the FinTwit 2022 conference, which actually starts on Friday. It's a Friday-Saturday affair. We'll be there all day hanging out. And if you're going to be in Vegas, we'd love to meet you and say hi, say what up. I'm so hyped, man. I was like, let me just tell you, I don't mind like confessing to this, but I like wasn't totally convinced that I didn't have COVID last night. I was like, shoot, do I have COVID? So I went home, I took a test, and they were like, I took 2 tests actually, and they were like, nope, you don't have COVID. And I was like, yes, because if I did have COVID, I wouldn't be able to go to the event, and Nicole would kill me. And I was supposed to go to the last event not the last, the one before that in October. And I had COVID for that, and I couldn't go at the last second, and I was very upset. So I'll be there in Vegas. Could not be more excited. Still have to pack, though.
Yeah, I was going through my stuff today, and it looked like I may have lost some clothing items over my trip in New Orleans.
You lost clothes?
Well, I lost like a pair of pants that I wear frequently.
Like chinos?
Yeah, like my all black chinos.
Chinos are
from Bonobos.
So versatile, man.
And the funny thing is I was like, my friends were like, oh, like I like those pants. Where are they from?
Can I ask you, how do you lose pants?
I was like, Bonobos. I don't know. Like I guess I just didn't make it back in my suitcase. But it
wasn't like you were like wearing them.
I didn't just like come home from a night out.
Okay,
that's happened before.
All right,
but not this weekend.
All right.
That was more like 19, 20-year-old AB. But no, I mean, I was the most upsetting part about it was I looked on the Bonobos website now, and they don't sell the pants anymore.
Sad.
All the comments on there are like, these are the best pants ever. Why would you ever stop making these? Yada yada.
All right. That's sad. Okay, well, let's talk market though. Okay, so we just got a comment in the chat. Darren says that we are talking differently. The majority of us are in panic mode today. All right, let's talk about this. Being in panic mode. First off, is anything different today from yesterday or the day before that? Like, yeah, we had a CPI number, but CPI numbers come out every single month. We get inflation readings all the time. And the reading was, well, what did it say? It said the prices went up a little bit more than like a group of economists were expecting. That's really what it said. So no, the answer. I'm answering my own question. The answer really is no. Nothing really is that different today than it was yesterday. Okay. Nothing has really changed that much. I will say this with regards to, I don't know what kind of exposure y'all have or how invested you are, how much your net worth is tied up in individual stocks or tied up or you have it in cash. I have no idea. Maybe if you want to share, you can. Aaron and I can share as well. I would say this: market corrections, and that's what this is. Bear markets are normal. If you have the majority of your investable assets invested in the same kind of asset, like the same kind of stock. I don't mean like the same stock, but like the same kind of stock, like high growth stocks, for example. These are stocks that are share similar characteristics, or all technology stocks, or I don't know, all oil stocks, for example. Uh, in times like this, you're gonna feel it the worst because you're not diversified. And there is nothing wrong. Oh, Jesus, Darren. All right. We'll talk about that. There is nothing wrong with selling at a loss. There isn't. I don't know how much pain y'all are willing to take. That's a question that only you can answer for yourself. Aaron can answer for himself. I can answer for myself. All right. I don't know how much heat you're willing to take. We all have different pain tolerances. There is absolutely nothing wrong with taking a loss. There really isn't. Okay. If you can't take the heat, then get out. That's fine. That's totally okay. Right. But if you have a long time horizon, if you are diversified, if you're young, and you can say, hey, I can afford to take this risk. I can afford to keep this here.
Yeah, but then, I don't disagree with you, Spencer. I would just say to like what Darren's talking about is like,
I mean,
he wasn't taking a risk. He didn't think he was. He thought he was buying a stable coin with a fixed interest rate, and it's not just individuals. I mean, even we here at Benzinga have some of our corporate treasury in U.S. stable coins. There's probably lots of small businesses throughout the country that are doing that, saying, oh, yeah, it's more attractive to put some of our treasury where we're getting a 10% yield rather than a 1% yield from the bank or whatever you would get. I don't even know if you would get 1% from the bank, or maybe now you would with the interest rates. But I really think this has the potential. I'm not calling it the pivotal moment, but
oh, come on,
I think this has the potential to be a truly pivotal moment in crypto, because now, I mean, it doesn't matter what Terra Luna can try to do, or maybe even other stable coins, what kind of yields are going to attract. I think the psychology of it is broken somewhat. How can you can't sell me on a stable coin right now when they haven't been stable?
Right. When a stable coin hasn't been stable, it defeats its purpose.
Right.
So, here, let's bring up the chart of USD, because that's probably the story of the day, frankly. Yeah, we'll talk about inflation more. We'll talk about like Coinbase later today, I'm sure, and Unity and Disney reports tonight. But the story of the day, frankly, is Terra. Terra, which is a stable coin tied to Luna. And again, if you're not following the story, stablecoin designed to keep its value pegged to the U.S. dollar. You can see it is pegged to 1, right? That's 1 USD gets you 1 U.S. dollar. And now here we are after a period of a couple of days, it's fallen by half its value. Aaron and I don't have the crypto expertise to explain the semantics of why this is happening. I mean, I can explain what I've read.
So I will free plug here.
Yeah.
It's probably not a secret to anyone on the show. One of my favorite people to follow in the finance space is Joe Weisel. I forget his exact title. I think he's the head of like digital news at Bloomberg, something like that.
I don't know.
But he's got a podcast with Tracy Alloway, Odd Lots, and he actually had Matt Levine, who, let me get his title because I don't want
Matt Levine. Okay, I want to just pivot off of your tangent. Matt Levine is my favorite finance writer in the world.
Okay, so on an episode of Odd Lots, Joe had Matt Levine and
Sam Bankman-Fried
on the other day. I listened to that, and Sam talks a lot about yield farming in that, which is what stable coins like they're talking. It's kind of funny because this like episode was like 2 weeks ago. I listened to it, and this all has happened like a week later.
Yep.
And Sam Bankman-Fried's like kind of saying the quiet part out loud.
He did.
And he basically like outright calls some of these things like Ponzi schemes. Like they are you need more volume coming in. You need more people buying it. Otherwise, the system doesn't work. And Brian Blockchain, I'll be completely honest. A lot of this stuff, like hearing Sam Bankman-Fried, obviously the guy's a genius, knows more about crypto than maybe anyone else on the planet. Some of that stuff goes over my head. So, the algorithmic stablecoins versus non-algorithmic, I'm going to have to do more research on that. I think, Brian, maybe the more important thing here, even if USDC is safe compared to USD or UST, I don't think the general public knows what you know, Brian, that maybe that USDC is built differently using algorithms. So if the general public just thinks, hey, even the stable cryptocurrencies aren't stable, they're not going to be able to see past that and see USDC as something different, see it for what it is. So if you're interested in this subject, just free plug, like I said, I think that's a great episode to go listen to.
I'm going to drop the link to the transcript in the chat right now.
Can you read the part where I'm talking about where he
I'm trying to find it.
Where he basically says, I can find it too.
So okay, algorithmic, non-algorithmic stablecoin. Is this proof that algorithmic stablecoins don't work? I mean, maybe. Clearly, it's not working, right? Something's not working here. So, I saw what was tweeted overnight by the head of the Luna project, and what Do Kwon is his name, and they're essentially just creating more supply out of thin air in an attempt to stabilize this price. This is, I think it goes without saying, and you guys don't need us to tell you this, but this is like ridiculously complicated stuff. And this, frankly, is one of the reasons that I've been so hesitant. I was so late to the crypto game. I didn't buy my first crypto till last year. I didn't buy Bitcoin till last year. Okay, because like I'm not a computer scientist. I'm not a developer. I don't understand a lot of this. Okay, now that sucked for me on the way up.
Well,
I don't really know what to say with regards to UST or Luna today, because UST is down by half, but Luna is down like 90%. So, I can't sit here and tell you it's going to come back. I can't, because I don't know. That I'm just
and happy. I think that's Sam Bankman-Fried talks about that as well. He's like, all these exchanges, we can just make our own coins. Anytime they need to like raise money for something, we'll just put a coin out there, whatever. Yep. Someone said, JT Random said, I'm freaking out. Here's the thing is, if you have a lot of money in crypto right now that you can't afford to lose, I would tell you right now, and this is not financial advice, but that is not smart. And if it were me personally, I would take it out, or I would, and that's been like my position on Bitcoin and Ethereum as an investment this whole time. Is I was
stocks. Well, that's anything, right?
My position on like Bitcoin and Ethereum and has always been like, yeah, fine. Ethereum can be 1% of my portfolio or something, so that if I'm wrong about crypto, if everyone else is right that says it's gonna like take over the world and be the thing, and I'm wrong, then okay, cool, I'll still have a little bit of it. But I'm not going to put like 20, 30, or 40, or 50, or even some people have 100% of their money invested in cryptos or more than that. And I think right now is a time where if you still have money in there that you cannot afford to lose, and it's all in crypto, then I would strongly consider taking. I mean, because think about it, all these people are a lot of people that have gotten into crypto in the last like 2 years, whether it's like from COVID,
Yep.
it's you like buy into the idea of it so much that this technology, you hear that all the time. I'm into it for the technology, like not as an invest, like this has the ability to change the world, blah, 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 blah. Just take for a moment to consider, like, maybe what if I'm wrong? Is it worth putting all my money into this speculative asset? So I don't know. I've talked to some of my buddies that have a lot of money in crypto. A lot of them are selling some of theirs right now, just worried about kind of it seems like a lot of the wind out of the sale, or a lot of the wind has been taken out of the sales. Now of course, this is a conversation we're having right now. If in 2 weeks Bitcoin's at 45,000, the landscape could look a little bit different. Maybe some fear is taken off the table, sure. But I'd be willing to miss out on that, Spencer. I'd be willing to miss out on a Bitcoin run, knowing I have the peace of mind saying, hey, my money's not gonna, go to zero if Bitcoin crashes. So
I'm still trying to find that quote from the podcast.
It's so like in the weeds. Like I literally had to I listened to the podcast twice.
All right, I found it.
Okay.
So here's the question. This is from a podcast on Bloomberg from like 2 weeks ago. This is with the CEO of FTX, Sam Bankman-Fried, who is like a gajillionaire and might be a genius, probably is a genius. He was asked, "Can you give me an intuitive understanding of yield farming?" That's the question. Give me an understanding of yield farming. And Sam gave a really long answer. I'm going to read part of it here. Let me give you sort of like a toy model of it. I'm going to try to skip through the fluff of this answer. So we're
here.
Okay.
I'll read this part. So Sam Bankman-Fried gives his whole response, which is very complicated and almost like a thought experiment. And then Matt Levine says, "I think of myself as like a fairly cynical person. And that was so much more cynical than how I would have described farming. You're just like, well, I'm in the Ponzi business and it's pretty good." And then Wiesenthal says something, I'm going to whatever. And then, well, actually, here, I'll read Joe Weisenthal's part because Sam Bankman-Fried might be replying more to him than Matt. So Joe Weisenthal says to that, "At no point did any of this require any sort of economic case. It's just like other people put money in the box, and so I'm going to too, and then it's more valuable." So
Right.
they're gonna put more money in, and at no point in the cycle did it seem like describe any sort of economic purpose. And Sam Bankman-Fried says, so on one hand, I think that's a pretty reasonable response, but let me play around with this a little bit because that's one framing of this, and I think there's a sort of depressing amount of validity.
Okay.
So you have the guy who's basically running the show in crypto saying, yeah, there's a big amount of validity.
I want to read this example. So he's asked about yield farming, gives us an example. All right. He says, let's create a protocol. And we're going to call it Protocol X. This is from the transcript. All right. And it's a box. Protocol X is a box. Okay. And you take a token, right? Take Ethereum, for example, and you can put the token in the box and you can take the token out of the box. All right. So you put it into the box and you get an IOU for having put it in the box, and you can redeem the IOU back out for the token. Okay. This is his example. Okay. And, this is call the token X token. All right. And I'm reading now. X token promises that anything cool that happens because of this box is going to ultimately be usable by the governance vote of holders of the X tokens. They can vote on what to do with any proceeds or other cool things that happen from this box. And of course, so far, we haven't exactly given a compelling reason for why there ever would be any proceeds from this box. But I don't know, maybe there will be. So that's sort of the start. That's where that's the genesis here of a lot, not shitting on all of crypto, but a lot of crypto here, right? Is you have all these tokens that don't do anything, but maybe they can one day. That's the idea. And that kind of mindset, again, he's like you said, he said the quiet part out loud. That kind of mindset where it's all kind of based on nothing. And he admitted that. I think It's not. It shouldn't be a surprise that we're seeing this total crash happen. So again, if you're in Luna, I am so sorry. Okay. I've never understood the yields on these stable coins. I know Benzinga has, I don't know what stable coin we have. It's not this one.
I think USDC.
We have USDC. These stable coins can offer these yields of what? Like 5, 6, 7, 8% just because there's more people coming in after you, right? I don't know. I've never understood how that worked. Like, there's a reason that like your bank account gives you like 0.05% interest because the banks don't want to pay you money. So I've never understood how there's this big spread between what the banks can pay you and what these stable coins can pay you in interest. But there is. Now that's going out the window here for UST and for Luna here. And I mean, I don't know. Like, this is a risk that we all take. Okay, this is a risk we all take when we invest. Nothing is guaranteed. I'm sorry.
And and I want to make I think, like, and this is again, like, I'll try to do a better job of, I guess, if I'm speaking to y'all, like, saying like what's essentially my opinion versus what's actually like fact. And this is just my opinion of crypto, and I think I can hold these two. I can think both these things are true at the same time, and that's, I think that Bitcoin and blockchain technology is not going anywhere. We'll have there will be use cases for it. We'll see in our lifetime like how that technology develops. I think it's cool. I think there's a lot of good things that come out of it, and then I can simultaneously think that I still don't think Bitcoin's worth as much as it is right now, and that it has a lot of the characteristics of just needing more, like Bitcoin needs more people to buy it or more interested. It's like any asset, like for it to go up, one willing to pay a higher price for it. But I'm very skeptical right now of the actual purpose of like the economic like Spencer and I were talking about this before, like where's the value going back into, the resources are real going into Bitcoin, going into crypto, right? Whether you're talking about the energy or the hours of labor, or think about all the people in Silicon Valley that are, working in the crypto industry that could be working on how to figure out how to store clean energy, something. So to me, it's taking more value than it's adding to society right now.
Yep.
And that's just where I'm at. I hold the right to change my opinion as things change, but that's where I'm at right now. And I think more and more of the general public. And I was also basically Spencer, we talked about this too. You remember you watched the Beanie Babies
I did.
Documentary?
I did. It was great. I loved it.
One thing I actually thought was interesting was in there, they give like as the documentary starts, they give like a textbook definition for like a bubble asset, and they give examples. They're like tulips, yada yada. But they put cryptocurrency in there, and this documentary probably was produced like a year, like 2 years. I was like, and when I saw that, I was like, well, I don't know if that's fair to like call, whatever. And then like thinking more about it as they were talking about it, even with Beanie Babies, and I think this is similar with Bitcoin, the first like mania, I don't know if mania is the right word, but people it kind of spreads word of mouth first, right? You didn't hear about Bitcoin from a commercial. You heard about Bitcoin from people talking, saying like, "Oh, shit."
I don't remember. Do you even remember when the first time you heard about Bitcoin was? I have no idea.
First commercial, you said?
No, just the first time you heard about.
I have no idea. I heard about Bitcoin in like 2015, 2016 when it was like exclusively.
Yeah, that sounds right.
When it was exclusively used as like a Silk Road, dark web type.
Sounds
thing.
right. Yeah.
And I remember it's very specifically. So I read a news article in like 2015. I could probably find the article if I want to. In spring of 2015, about in Japan, someone had bought a Tesla with Bitcoin, and that was like the first time. So, like that was like at the time the biggest purchase using Bitcoin. And I remember like I thought it was really cool at the time. I was like, look, like this is like legit. See, like someone just bought a car with it, like whatever. So I was all hyped up about it. I bought my first Bitcoin at like $400. Obviously don't have it anymore, but
yeah. Oh, you know what I remember? there was a documentary about called Banking on Bitcoin. It came out in 2016.
Really?
Yeah, I watched that in like 2017.
Damn. See, like I'm sure the person that made that movie, like it's so funny being like, because like I wonder if they were critical of Bitcoin then, or if they like loved it. But I'm sure even if they loved it, it's like I wonder if you would talk to them now and they're like a multimillionaire from Bitcoin, or probably not, because even if you own Bitcoin from like $400, like most people, like human psychology, like you're gonna sell it at some point. Like most people won't hold that till it gets to 60K.
Yeah.
But my point, Spencer, I was trying to wrap up real quick, was just that you heard about Bitcoin organically, right? Like it starts making the round organically on Twitter, social media, people talking about it. But then, and that was the same thing with Beanie Babies, right? It was like moms talk, whatever. But then once you get to like the very late stage cycle of it, it becomes all marketing and like
all hype, and then there's no there anymore.
Exactly. And that was what happened with Beanie Babies. That's what happened. They started making like they were having like events and like had a Beanie Baby magazine and all this, basically encouraging, and like that's kind of where I see like it seems like crypto right now. It's like there's a reason crypto.com is paying millions of dollars for Matt Damon. There's a reason FTX is paying millions of dollars for Larry David, right? Like it seems like it's more and more marketing and kind of fluff right now than it is like actual substance. Check out this technology. Look at all the cool things we're doing with it.
Yep. And I should mention, full disclosure, that like obviously Benzinga has a lot of partnerships in the crypto space. We have relationships with firms like Voyager. We have relationships with FTX. We have relationships with almost every major player in the space in some way, shape, or form, whether it's for like lead gen stuff that we do or sponsorships or whatever. But nobody, the end of the day is no one really knows. No one really knows. Is this whole thing a gigantic bubble? I don't personally think that. There are people that do. They've been very, very wrong the entire time. Yeah, they have been. The people that have been saying Bitcoin is a bubble, maybe they've been right for the last couple of months. I don't know, but this is what Bitcoin does. I'm referring to Bitcoin specifically and not like crypto as a whole. I mean, our chart only goes back to 2017. But
the only reason I would have any disagreement with that is I would say that like the people that say that Bitcoin or crypto as a whole is completely a bubble, even at all-time highs, you can say you're wrong in the sense that like you've lost money, but they would say the only reason this is valued this high is just because everyone else thinks it is. There's no actual value there, which is like by definition what a bubble asset is. So yeah, and I do think like if you're in this space, like if you're a big like crypto bull, like you should want to have these conversations. You should want to like figure out how do we get these like rug pulls out of NFTs or these like shitty DeFi coins that pop up and get rug pulled and go to zero, because it's like if that's going to be a prominent part of the industry, it's not going to like catch on to as popular as it could be or last. So it's like you should want to have, and I think that's why Sam Bankman-Fried is like willing to go on Bloomberg with Joe Weisenthal and have these conversations. Like to me, that's so much more like I have so much more faith in that than someone in crypto that would be like, no, you're a hater. I don't want to talk about that.
Just head in the sand.
You're a hater. Okay, no coiner. Like have fun being poor. No coiner.
I do disagree somewhat with this statement. You can say something is a bubble and just be wrong until the pop happens.
Is that George Carlin on his thing?
Yes, it is.
I wonder what George Carlin would have to say about it.
Gosh, we should be so lucky to have George Carlin right now. What was I about to say? No, I think I'm thinking a lot these days for obvious reasons about the .com bubble. Because A, I wasn't really around for it as an investor, and B, it was for many people the formative investing experience of their life. And first off, people were calling tech stocks a bubble for like 4 years. Okay. Alan Greenspan, who's the chairman of the Federal Reserve, said there was irrational exuberance in 1996. The bubble popped in 2000. All right. And a lot of those stocks in the .com bubble never came back. But the underlying belief in the internet, in technology, that was proven right. all the people that were saying, no, it's not a fad. It's technology. The internet is going to change everything. They were right. Okay. But what happened along the way? Along the way, you had a lot of casualties. You had pets.com. You had AOL, Yahoo. You had Netscape. A lot of casualties on the way to the internet being what it became today, right?
Wait, so and I should probably do some more research on kind of the. I feel like, and I don't know. I feel like the 08, 07, 08 out of the two, maybe it was bigger in terms of just like lasting.
It was bigger. The .com bubble was a bubble for technology stocks. It did actually lead us into a slight recession, but the people that felt the pain from the .com bubble were technology investors and people that worked in tech. People that felt the pain from the Great Recession was everybody. Literally everybody.
Yeah, and
the whole world.
I remember
felt pain.
I remember like I was like 11, 12 at the time, and I remember like things weren't as good as they were. Like, and it was I think I had like I had
terrible.
I had the blessing of being so young that like I didn't have to deal with any of it. But I remember like my parents being more stressed, like, oh, why aren't we going to Florida this year on spring break? Like, you know, like, so it's so I've always been kind of more familiar with that just because it's been closer to like relevance in my lifetime, and I think bigger. But wasn't there like a Super Bowl commercial for Pets.com or something that
I don't know. So the Great Recession, the housing bubble, that was more of a worldwide financial crisis. The .com bubble was exactly that. It was if you weren't working in technology or if you weren't investing in tech stocks, I don't know how badly you really felt the pain from the .com bubble, because it really was sequestered to those groups. Everybody felt the pain from the housing bubble and the subsequent recession. But my point was just this, right? You can be a Bitcoin, a crypto believer, a crypto evangelist, and still acknowledge that there will be casualties along the way. Is that what's happening today? Is Luna or Terra USD? Let's bring that chart back. Let's bring up the Luna chart. Is that a casual? It could very well be, right? Sometimes that's the way markets mature. So,
yeah, I mean,
this is not the end for crypto. Let's pump the brakes on that idea.
Especially too, you got to keep into you got to remember just how completely unregulated this is. I mean, like, this is like the wild west of money. Crypto is, or it has been. And if you don't expect like there to be, as Spencer's saying, some casualties in that, if like anyone can go start a coin, start a website, and as long as you convince enough people to buy, you know, it's like there's no one checking to see if there actually is any sound technology or even a sound like economic principle behind some of these projects. So you just got to remember, like, in unregulated markets, industries, shit like this happens.
Oh God, I can't believe I'm saying this, but man, we need some regulation up in here. We really do. I don't care who it is, the SEC, the FINRA, whoever, it doesn't matter. Can someone step in and do something? Okay, because this industry needs some. They need some freaking rules. All right, it does. There are people that just got totally wiped out in the last 3 days.
Yeah,
and even Bitcoin itself, for years, it was sold to the public as, oh, this great inflation hedge, but we didn't have inflation, so there was no way to prove it. And now we have inflation, and guess what? It ain't a hedge.
Yeah.
It is not a hedge.
I'm saying they all, but people that said that, oh, this is a great inflation hedge, said that because the other, whatever else they were saying wasn't working, and it sounded good. They didn't have any data to back that up, saying, oh, look at this high inflationary time. Bitcoin did this. Oh, or look at when, whatever. They had nothing to back it up. They just thought, oh, it's staying, it's
store value.
store value, but what am I trying to say? That the supply isn't increasing. They're like, oh, the U.S. dollar supply is increasing.
That argument.
But wait, hold on. This is the good part. The U.S. dollar supply increases, which means it's worthless. Is what like a Bitcoin maximalist would say. Bitcoin, however, doesn't have increasing supply, so it actually has value, unlike USD. The problem with this logic is the U.S. dollar did kind of used to have a fixed supply, and it was when we were on the gold standard, and we went to fiat for a reason, because you need to expand the monetary supply when you need to. So it's like, oh, let's go back in time to a monetary system where you don't have the ability to increase supply if needed. It just doesn't. It's like, instead of saying,
doesn't make sense.
Oh, we're the money system of the future. It's like, no, you're just doing old money, but on the internet, really.
Yeah. That argument is BS. And likewise, the argument, if you ever seen or heard someone say, oh, well, look at the dollar. The dollar's lost 90% of its value since 1925 or whatever. Here's the problem with that argument, though. Literally nobody holds dollars for 100 years. If you're holding a US dollar for 100 years, then you either lived to be like 120 years old, which, I mean, hey, props to you. Or you just wasted that entire time, because people invest. They invest in companies. They invest in business. Nobody holds a dollar. That applies to no one. That applies to nobody. You say the dollar has lost 80% of its value in 100 years. I see that stat get thrown around every few months. But no one does that. No one does that. Okay? Dollars aren't meant to be held for 100 years.
Since we don't have a guest, should I ask my friend if he wants to come on the show?
Yeah, the friend with the glasses?
My friend... Wait, no, not the one that called out my fake glasses. I could. He just FaceTimed me, so we'll call him back.
All right.
Hey.
Yo.
You're live on Benzinga Live right now.
He's live on YouTube.
You're live on YouTube.
Am I?
Yeah. All right, I won't say his name. All right, you have anonymity.
Anonymity?
Anonymity.
Dear Lord, man.
What are your thoughts?
Bought some Twilio.
Okay, he just bought some Twilio. What are your thoughts on the crypto market?
I would say in general, it's behaving like a risk-on asset. So
okay,
there hasn't been a time yet where like the market is not correlated with crypto. So I would say as the stock market continues to dump, crypto will likely do the same. So.
But you said you bought the dip today, bought some Twilio?
Yeah, I think they're down, I think like 80% from their all-time high.
Dear Lord, man.
So you can only drop 20% from there, right?
Yeah, I don't know. Tech multiple is getting crushed, but I think there's some select companies which are actually generating a ton of cash. Like I think I'm gonna buy some Square too, actually.
Wait, can I ask a question? Why do you have to buy it today?
You don't have to buy today. I think you could dollar cost average over the next like 6 months. I don't think there's going to be a catalyst for any sort of rapid recovery like we had post-COVID in the near term here. So I think like we'll be trading at these levels for a decent bet.
Okay, so you think either like just choppiness for the next 6 months, maybe a little bit more pain, but no big rally to speak of.
No. I mean, the Fed has that dual mandate in terms of unemployment and inflation, and obviously inflation is the bigger risk right now. So I mean, rates are going to continue to rise, and
we'll see. So I don't know if you've seen this. I feel like anecdotally, and we've seen a couple companies come out. I feel like I've seen some layoffs the past couple weeks.
We had one today, Carvana.
Carvana laid off 2,500 today. I'm just saying, if we keep seeing more of that, maybe the Fed says, maybe inflation. Maybe we want to keep people employed too, instead of just. I don't know. We'll see.
We'll see. I mean, I don't know what. Like, let's look at the unemployment, like the effective unemployment chart over the last few years.
Oh,
I mean, go ahead.
Sorry, I just a comment in this chat. Market Fiend in the chat just asked, "How do we see Bitcoin?" We just talked about Bitcoin for like half an hour, so if you just want to rewind, yeah.
Yeah, I'll bring up a chart on the screen.
For what?
For Bitcoin, we can look. People are saying to look at Bitcoin right now. So
is it making moves?
That's what I'm doing. I mean, it's above 30,000, which is about as good as you can ask for right now. This is Bitcoin today and yesterday. So, I mean, it's fair to call this a crash this morning, and we gained it all back a couple hours later, but this was a crash.
So I actually have been a little bit like seeing some of these layoffs and stuff, and like kind of like, oh, that's not good. But what's interesting from if you pull up like the USD to Euro chart or the chart of the bonds, both of those markets are pricing out a recession, saying we don't think a recession's coming. Right. If you look back in 07, 08, the US dollar or the euro was spiking compared to the dollar. The bond yields were spiking up because people were pricing in that risk of a recession. And you don't really see that right now.
I like this comment, actually, Shelly. This is good. Cash, if you're in cash, you're losing. By definition, you're losing 8.3% per year, but that's better than a lot of other stuff right now. So,
all right, mystery man on the phone. You got Twilio, Square, any other?
Are we buying any other non-tech?
Any non-tech?
I mean, there's probably some energy plays you could make, specifically within oil and gas. That's I don't know. I've been really sticking to some of these tech names which have gotten hammered.
All right.
But yeah, I mean, I think like you could go with an energy producer that is going to benefit from the supply shock from Ukraine and Russia too. But yeah, that's not what I've taken a look at. So.
All right, we got Twilio and Square. We'll keep our eyes on those. Thank you, Mr. Mystery Man on the phone.
Mystery guest. That was our first mystery guest. By the way, we should mention who today's guests are. We're gonna have Nick Chahine on at 1 and Jesse Kaylor on at 1:30. At 12:45, we are gonna do a trivia segment because we're not doing a show for the rest of the week. And I heard y'all had a lot of fun last week without me playing trivia, and I want to play, so we'll do that. But I came up with the questions for today. I made the questions have a purpose. So it's trivia. It'll be fun, but they're going to have a purpose. I promise. There's a reason I made the questions what I did today. So that'll be at 12:45.
All right. So Holly and Daniel, I see y'all talking about this recession. So
yeah, perhaps. Perhaps we are.
Well, no, here's the thing. So even if the next GDP number is negative again.
Yep.
It needs to be negative, I think, more than 2% for it to be considered.
No, it's twice in a row, I think. Isn't it?
It has to be. It has to be slowed down by. Maybe if it's like multiple quarters in a row, I don't know. Maybe, but I was under the impression the textbook definition for a recession had to be grow less than 2%, whatever. That would be really, really bad because the Fed is still predicting GDP growth of, I want to say, about 4.5% this year.
Yeah.
So if they're off by that,
it's the textbook is two quarters in a row.
Okay.
Yeah, it's the text. That's what the textbook says. That's not to say that's not what it has to be. It doesn't have to be right all the time. But your point is also valid though.
My point is just that the Fed is. Oh my God! Now my mom is calling me.
Dude, tell your mom you're busy. Yeah, your point is that there's a bit of a dichotomy right now between expectations and reality.
If the reality, that'd be really bad if the Fed is predicting GDP growth of 4.5% throughout the year, and we end up with the first 2 quarters negative GDP. I don't know. I mean, it's also, yeah, I got to shout out my mom. I tried to explain to her like at the very beginning of COVID, she was asking me about Bitcoin. I explained like everything I knew to her about it, and she was like, "See, that just sounds to me like a Ponzi scheme." I was like, you know what, Mom, you might be right. I don't know.
Maybe you're right. Maybe you're right. I'll never forget the article that I read in the New York Times. I think, what was it, January 2017? Whatever. Remember the first run to like 20 grand? What was that?
2017.
Was that 2017?
Yep.
Okay.
Well, it was like January 2016, end of 2016.
Right. And the article came out, and the headline was, everybody, and I've said this before, everybody's getting hilariously rich on Bitcoin, and you're not. And that, if that isn't a headline that you only write in bubbles, and I don't know what is.
Well, here's the other thing too, and to me
that gets to the crux of it.
This to me, I think about more with like Dogecoin than Bitcoin, because I don't really hear this sentiment out of people pushing Bitcoin that much. But definitely with Dogecoin, it was like, do the proponents of this really think like everyone can just buy this? And well, honestly, if everyone did buy it, and only the people that sell it first are gonna like actually make money. But if someone's trying to tell you, oh yeah, we can all buy this thing and we're all gonna get rich, like if something sounds too good to be true,
again,
it probably is.
You own Bitcoin. I own Bitcoin.
I don't anymore.
Oh, sorry. I own. Fine. I own Bitcoin. All right, a little bit. I own Ethereum too. And I bought those things because I wanted exposure to crypto as an asset.
Wait, here, I'll call my mom back and tell her.
Wait, producer Rohan, man, why you on my computer? What you doing over there? He's going through my cookies. He's going through my email.
Hey, 1 second.
Right.
What were you calling about?
Wait, did he just call his mom? What is going on this show?
Oh, I know.
All right, dude. What are you doing?
I'll get that figured. I was just gonna tell you something real quick. So I'm on my show right now. We're live. So I have you on speakerphone. So remember like a year or so ago during COVID, you were asking me about Bitcoin and crypto, and I explained it all to you, and you said, I don't know, that kind of just sounds like a Ponzi scheme.
Yeah.
I think you might have been right.
Why? What's going on?
I don't know. No, I'm kind of kidding, kind of not. But just a lot more people are saying that now than they were back then.
Hi, Mrs. Bree.
Who's that?
That's my coworker, Spencer.
Hi, Spencer.
All right.
All right. Well, I'll call you back after the show.
Okay. Okay, honey.
All right. Bye.
Man, AB's phone blowing up today. People calling him dude. No one ever calls me.
I don't know. Yeah, Benzinga Live used to do phone-ins. Now we phone people. Should we phone more people?
Oh man. No, let's talk about like maybe the stock market. You want to get off the crypto thing for just a second? Or...
I do. I do want to talk about the stock market because shit's interesting out there. Spencer.
Yeah. Okay. So your friend who called earlier, who's buying Twilio.
Yeah.
This is my take on the stock market right now. If you have anything more than like a multi-year time horizon, I'm sorry, anything less. If you have anything less than a multi-year time horizon, I think now is a pretty bad time to buy almost anything. Almost anything. If you have a longer time horizon, then go for it. If you're buying stuff that you think I'm going to give this to my kids one day, or I'm going to put this in my retirement account and never sell, then great. Anything less than that, I just don't know if you want to be buying any, especially technology, okay? Especially tech stocks. It's all fine to have your list. Everyone should keep a list always, a shopping list, okay? I have a short shopping list, but you don't have to go to the store. I think it's a pretty bad time to be taking any swing longs on any individual stocks. What I would be buying and what I am buying, and I said this morning and I put it in the Benzinga Pro Trade Ideas, I am buying the overall market. Again, why though? Because I have in a long time horizon. I'm not going to sell any VOO until I like retire and I need the money, right? So I would certainly be dollar cost averaging into the overall market. I am not at all confident in my ability. I've never been particularly confident in my ability to pick individual stocks. And I'm feeling even less confident than normal. And that's what happens in bear markets, right? That's why I stick to ETFs mostly. Not all the time, but mostly. But I'm not going to lie to you guys. SoFi has me shook, okay? I don't want another SoFi. I'm down. I've lost 3/4 of my money in SoFi. I don't want more of that, okay? So if I had to buy something, and what I am buying is the broad stuff, is the overall market, the VOO, VTI, VEU for international, et cetera, et cetera, et cetera. That's what I'm buying right now. You want to know how to stave off a bear market? Is to have a longer term time horizon and just keep buying. There is ample data, and I can find you a link, and I'll get it to you if you guys want. If you had the worst timing in the world, if you bought the literal peak of every single market top before the Great Depression, before the recession in the 70s, before .com bubble burst, before whatever. If you bought every single peak and you just held long enough, it worked out for you in the end. So that's what I'm buying. Truth be told.
I think that's yeah. I have no clue, Spencer. I'll tell you this. Here's what I'm confident of.
Yep.
I'm confident that if things do continue, if the market continues moving lower,
Yep.
it leads. I think these next couple weeks, like next month, are going to be very pivotal in terms of knowing is like the weakness in the stock market going to lead more companies to laying off more people, which is going to lead to obviously more economic problems in terms of people that don't have or lost their jobs, so now that money's not going in the economy. I think we'll be able to see pretty quickly like that unraveling. But I don't think that's going to happen. I'm not worried about that right now. And because of what I just said earlier, because both the bond markets, right? You can look at like the 20-year note, what it was doing in 07, 08 before. It wasn't like the bond market moved retroactively after the stock market crashed. It was like while the market was moving lower, the bond market was moving up. That's not happening right now. The US dollar is remaining very, very strong. If globally people are pricing in a US recession, that dollar would not be as strong. With that said, there's a chance that people are looking around the world saying, oh, everyone's getting hit right now. Everyone's going to have high inflation. Everyone's going to be just kind of economy slowed. That's a possibility. That's a possibility is why the dollar is able to hold up right now, is if people are saying they expect other economies to slow down as well. And at that point, it's like, oh, it's the US dollar. Slowing US dollar versus slowing pound. It's still the dollar, right? It's still the go-to. It's still the world currency. So yeah. I think it's very interesting because I don't think it really makes a lot of sense right now. Like typically you would see the bond markets moving higher right now. You would see the dollar moving lower. To me, that's just an indication that the stock market is just taking time to catch up. I think we just need some sort of security, like some sort of assurance, right? Maybe it'll be that next GDP print saying, okay, maybe. Like I don't know what it will be. We need some assurance that, hey, things aren't going to lead to that like full blown recession that a lot of people seem to be worried about.
Yeah. If it sounds like I'm like a little bit flippant or a little bit or like not super concerned, frankly, it's because I'm honestly not. Like I said before, recessions are normal. Bear markets are normal. I was legitimately scared in March of 2020 and April and May and June, right? Like COVID scared me. A pandemic, we never had that in 100 years. That and the violence of that crash, just the sheer violence. And if you were there, you remember how he would open up and just go limit down, limit down, limit down. It was like every single Monday for 3 weeks in a row. It was terrifying. That was scary. This is just the market reacting to the fact that there's no Fed. The Fed is unwinding their balance sheet. They're not going to support the market anymore. And maybe there's a lot of stocks that are way overvalued in hindsight. And so it's a course correction. That's what this is. And maybe it leads to a recession. I think the current odds of a recession in the U.S. this year, like somewhere in the 35% range. So it's gone up. So maybe there's a recession. Maybe there isn't. Sure, there's going to be a lot of pain in some of these stocks that are down, like just in terms of just the businesses of these stocks that are down 60, 70, 80%. Carvana, Uber. Like what's Unity down today? Did Unity end up bouncing at all? Let's find out. AMC, which is down 10%. Or sorry, down to $10. I misspoke. Not down 10%. It's down $10. Down to $10. What's Unity now? Unity is $31, man. The stock was almost 207.
Wait, Unity's down to $30?
Unity was 210. It was 210 in November. It's 31 now. That's brutal.
All right, I want my hand up right here. I'll be the first to admit I'm just as susceptible to be like swept into any hype as anyone else because I was like, oh yeah, metaverse, like this thing is real. Like
you may be right in 10 years.
For a week, I thought the meta trade was on. Right, I was like, Nvidia. Well, actually, to be fair, I made my and this is on the record on the show. You can go back and find it. I made my metaverse ETF, and it was equal weight in Unity, Nvidia, like Amazon, Meta, and Apple, maybe.
Ouch.
I guarantee you that's probably doing better than some of the other Meta ETFs out there that were like more heavily weighted toward Unity and Roblox. No, I think it was. All right, Nvidia was definitely in there. Unity was definitely in there. Roblox was definitely in there. Meta was definitely in there. I don't know, maybe Amazon or Apple. But either way, it's just one of those things. It's like talk about this all the time. You don't want to be too late as an investor, but you also don't want to be too early. You can be sitting on losses for 10 years. I mean, the famous example is
Microsoft.
The famous example is, if you bought Apple in 1980, you're sitting on a loss for 20 years till 2000. Or
I mean, Microsoft. Yeah, if you bought Microsoft in the dot-com bubble, it took you 15 years to get your money back. 15 years.
Well, that's in a bubble. I'm not even talking about a bubble. I'm saying if you just bought Apple when it went public in like 85, like personal computers just didn't catch on yet for a very long time. So you were just too early. And that's where I see like the psychedelic industry right now. I think that's an exciting space. I think there will be, I think in our lifetime, Spencer, we will see some psychedelic companies be able to get drugs through the FDA approval, and people will have an option outside of SSRIs and some of like the shitty antidepressants that have been on the market for 20 years and haven't really changed at all. The ability, like, I think that's an interesting area, and I think that's an interesting area for investments, but I don't think it's ready. I don't think we're ready yet. I think it's going to take a long time before that happens. So, do I want to add some Atai or Compass Pathways? Sure. But Atai is just getting absolutely... This chart, Spencer, you mind pulling that chart up for me real quick?
Give me a ticker.
ATAI.
Holy crap.
Yeah, like I don't even if I believe in this company and believe in the industry long term, I don't know. Maybe I should buy some at $3. I mean, it's only $3. Like, how much lower? Can it go?
So all these stocks that are down to low single digits, like Atai or some of these a lot of these SPACs, right? I mean, if you want to take a flyer, heck, it's a lotto ticket. That's what it is right now. If you're buying it right now, you're buying a lottery ticket. So it's a call option. That's basically what it comes down to.
That's actually a fun exercise. What is the cheapest, not cheap in terms of like PE, what is the lowest price stock that you would like actually want to own long term?
Well, for me, it's SoFi.
SoFi is like $4. Yeah,
it's $4. It's $5 now. Oh, it's kind of up. Look at that. SoFi ripping here. SoFi ripping up 12 cents now. No, it's a good question in the chat. Wait, I want to answer this question too, which was what technical information can you look at to determine the housing market crash besides interest rates. You want to look at mortgage applications, which comes from the government every month. You want to look at housing starts, how many new houses are being built
Well, okay.
in this country. That's where I would start.
I would say too, and this data is out there. You can look at housing that have started versus like finished, so you can kind of know like how many houses are like under construction right now, and that's where I'm not really worried about a housing market crash because there's so much demand.
There is.
There's so much still like resources going into it. Because at the end of the day, it's what it's called residential investment. It's people are going like, you think people that have started building a house are just going to stop right now? Because no, like there's still going to be resources flowing into that. There's so much demand. We don't have enough house. We have a shortage of houses. So
Holy crap! That just reminded me of something. Yeah, we do have a shortage. Sorry, keep going.
No, I mean my point is just basically we have a shortage of houses. Like I don't see how in that environment people think that there will be a housing crash unless the idea is that just like everyone loses a fuck ton of money and then no one can afford to buy the houses even though there's a lot available.
Wait, you just made a comment offhandedly that people don't stop buying houses, right? Or they don't stop building houses?
Yes.
Okay. That reminded me. You guys remember, and maybe this is a sign of a freaking bubble, I have no idea. Remember that documentary, The Queen of Versailles?
I do not remember.
Someone in chat, help me out. There's a documentary called The Queen of Versailles. It came out in when? Like 2007, if I had to guess, somewhere around there. Let's check. When did this thing come out? It came out in 2012 is when the documentary actually came out. It was about this timeshare CEO and his wife that were building the largest single family home in America.
Oh, that sounds cool.
Freaking mansion. All right.
But it wasn't like Bill Gates or anyone.
Nah, he owned a timeshare company. And then the housing bubble burst.
Okay.
And everything went to shit. Okay. The house never got finished. The guy's business collapsed. Here, I'll drop you guys a link in the Wikipedia. Anyway, documentary is about this family. It's called The Queen of Versailles. They were building this. They called their mansion in Versailles. And anyway, never got finished. When the economy crashed, they crashed with it, and it was a documentary in opulence and in bubbles and in just compulsive behavior. Great doc. Anyway, why do I bring this up? Because yesterday I saw a commercial and they're back.
Oh, the same time share people are back?
There's a TV series on Discovery Plus, which I don't have and I don't even know how to get. It's called The Queen of Versailles Reigns Again. So the same wife from the first one is back. Here's a description. After a stock market plummet nearly killed Jackie's dream home, she and her family are ready to return to their famous 90,000 square foot home that never got finished from 15 years ago. Or 13, I don't know, whatever. Exactly, Trader, right. Is that a sign? Is this a sign of we're back in a bubble? Maybe. I don't know. That just because you said that no one stops building a home, but they did. They stopped for 10 years building a home.
Yeah.
And now they're starting up again, supposedly. Holy moly. Anyway, all right. Hey, it's 12:41. Yes, Enver, we are ready. Let's play some trivia, okay? Trivia today has a purpose, I promise. So we're going to load the trivia up. We're going to put it on the screen here. And here is how to play. You need to enter every question that we're going to ask. It's not multiple choice. But it's going to have a numerical answer, right? So
I won last week.
How many?
Although Oh shit, this is about to start. So Spencer, last week I won, but I had the advantage of seeing the questions before everyone else because there was no delay, and it's part of it is time.
Okay.
So I'm gonna go.
So why don't you and I? So you go to YouTube, perhaps, and play it there.
Yeah. Rohan, can you take this?
Wait.
Off the screen?
Enver's trying to talk to us. Hold on, Enver. What are you saying?
Yes. So basically, type in the numbers without any symbols.
All right.
No cheating.
Type in the numbers.
Yeah.
Don't put a dollar sign. Don't put a percent sign. Don't put any commas. Just type in the number and just the number. Here's question 1. Heading into today, what percent is the S&P 500 down in 2022? Just the number. Don't put percent.
Well, can you do decimals?
No, I don't know. Don't put a decimal.
All right.
Yes, 14 is a good that just like that. 1 4. 15, 16. There we go. These are good guesses.
All right, and I don't have the advantage of seeing the questions first today, so I just want everyone to know that if I do happen to win again, this time it's legit.
This time it's legit. Last time was totally fake and rigged. 30's a guess, 16's a guess, 12, 27. Correct answer was 16.
Really? Frank, are you sure?
I made these questions, so if you want to dispute it, please see my assistant. I could be wrong, but I'm not in this case.
Okay. I'm just surprised. Weren't we up yesterday?
So
we were I checked like a few days ago and it was like 14 and a half.
All right.
And I was like,
on average, about what percent is the S&P 500 up per year over the last 100 years? Not for the entire period, just per year, on average, every single year. For example, 1991, 1992, if you take every year
annualized return
and annualize it, it's called annualized return. Okay, what is the S&P up per year over the last 100 years? A lot of good guesses here.
You were right on 16, by the way. It's actually closer to 17.
A lot of good guesses. 12, 6, 8, 7, 11. All very good guesses.
I asked if I could do decimal. I was going to guess 10 and a half.
Kaylor says 25. 20. Someone said 25. That would be amazing if that was the case.
I would love that.
It is 10 and a half. That's the approximate average annualized return of the S&P. So what that means is if you buy the S&P 500, then on average,
Spencer, I don't think it's counting my scores.
That sucks for you. On average, you'll make 10.5% every single year. On average.
What the hell is going on?
Your scores aren't being counted?
No.
That sucks. Okay. This is my favorite question. If you invest $1,000 in the S&P 500 every single year, how many dollars would you have after 20 years, assuming the answer from the previous question, assuming you make 10.5% per year? You invest $1,000 per year for 20 years, you make 10.5% per year on that. How much money would you have after 20 years? This is my favorite one. Now, they gave the answer so fast. They gave the answer too quickly.
I don't.
Was the question too long, you think? Yeah, Dale says a lot. That's the correct answer,
I was
Dale.
pretty close.
A lot is the correct answer.
It's not going to count my thing again.
The answer is $68,000. I love compounding interest. Can I borrow your charger?
Yeah. Speaking of that, so I was reading about. Oh, it counted mine that time. There we go. All right, back on the board.
Yeah, Jay. I'm saying just an average. I know it depends on what 20 years.
I'm saying Warren Buffett. His original cost basis for Coca-Cola in like 1993 or whatever was like $1.5 billion.
Yeah.
He this year from Coca-Cola got paid like $500 million in dividends alone.
All right. When is the last time? Oh, Shelly, you shouldn't have done that because it read your answer. When is the last time the S&P 500 finished down for the year? Like what year? You have to enter a year here. I want to see some more years.
I honestly don't know.
We do have a few correct answers.
I've seen a lot of 2018.
Yeah, it was 20. Because remember the end of the year that 2018 was rough. Q4. And what was do we ever get closure on that? Anyone? Do we get closure on why we just like dropped 20% in like 3 months?
I thought it was China related.
In 2018 for no apparent reason.
I thought it was China related.
And then we bounced back in like January right
Remember
away.
There was like a whole like trade war talks with China going on. And then
I
Trump.
don't
got-
think
then
that. I don't think that was it. I don't know.
All right. All right.
All right. This next question is how many times? Right? Is that the question? I think that's. Yeah. How many times since 2000 has the S&P finished down for the year? So in 21 years, how many times did the S&P finished down for the year in the last 21 years? Aaron Bree says 4. I'm seeing 2, a 1.
I'm just guessing. So I'm guessing 08, 09. We
3.
know 2018. And I'm guessing there's one more thrown in
6,
there. Maybe
5,
like 01.
3. It was 5.
5? All right.
Yep.
That sounds close.
Yep. I think 2000, 2001, 2008, 2018.
It's probably
There's
09
one
too.
more. There's one more year.
Maybe 07 or 09.
One more year in there. I forget which one. These questions all have a purpose. I'm going to get to that point at the end here. We're almost done. There's only 9 questions, and that was what was that? The question 5?
That's I don't know.
So we're almost done.
I think I'd be doing really well right now if that one question counted my score.
Oh, so this is question 6 and 9. What percentage is Coinbase stock down this year? In 2022, I mean. Not in the last 52 weeks, but in the calendar year. This was I'm sorry, and it's not going to be exact because this is as of like a couple hours ago. So whatever happened in the last like 2 hours, just ignore it for purposes of this question. A lot of good answers. Some better than others.
Ooh, Jolly B and I both guessed 75.
You were very close. 78%. This is as of like 11 a.m. today. So I don't know what happened in the last 2 hours. Hex 214 Pony. I don't know if you saw the answer before you answered. You probably did. 78% in 4 months and like 6 days. 11 days. It says 11. So brutal. Brutal.
All right, so we got one question left?
No, we got 2 left, I think. 2 or 3 left.
Hell yeah.
All right. We should maybe get some music. Whatever. Question 7. About what percentage is ExxonMobil stock up in 2022? About what percentage is ExxonMobil stock up in 2022? XOM. You can cheat, but there'd be no fun in that. The point is not to cheat.
It's okay.
What?
I was thinking, so it's not from a year ago.
No, in 2022.
It's year to date.
Correct
I think
answer is 44%.
Wow, I guess 32. I was gonna say I bet it's somewhere in between 30 and 40%. That's a great 1-year return. If you're up 44% on ExxonMobil, I'd sell right now.
Well, it's funny you said that because the next question gets to that a little bit. So I don't know how we tell like the winners. Maybe it'll just add it up for you at the end probably. But I guess whoever's closest to the answer, is that how it's measuring? I have no idea. All right, so we know that ExxonMobil was up 44% in 2022, but by what percentage did ExxonMobil underperform the S&P over the last 10 years? So, for example, if the S&P was up 10 and the ExxonMobil was up 5, it underperformed by 50%. You get the idea. By what percentage did ExxonMobil stock underperform the S&P 500 over the last 10 years? So, big discrepancy here in answers. 67% is the answer. If you bought this, if you bought SPY and I bought ExxonMobil, I've underperformed you by 67% over the last 10 years.
See, I was doing the math in my head. I was thinking, okay, say, because we just did 10.5 annualized for S&P. So think like 105% gain over 10 years. And I was thinking, well, what if Exxon was pretty flat over 10 years?
It was down.
Right. So how would it?
I looked at the total return. You got to do total. You not just do the stock. You got to look at total return. So that includes dividends.
Got it.
Maybe I should have specified that. Is this the last question? Okay. By what percentage is Apple stock up since its IPO in 1980?
Oh my
Guys,
God.
guys. For this
What?
question, can you type in the answer as soon as you saw it on the screen? I just want to see if it's going to register your answer and to see if this is broken actually, because I noticed something. So
Okay.
basically, when you see the answer, just type in the chat.
I'm telling you now, it's a higher number than you all are saying.
Even me?
Yep.
Really?
152,000. Oh, he wants us to type it in now? Is that what he said?
Holy shit.
Yep,
No,
yep,
yes,
yep.
and once it's up there.
Okay. Because if you account for all the splits, Apple's done what, like 5 splits?
Yeah, it is broken.
It's he says it's broken. Oh, great. All right. Well, let's get this fixed for next week. The Apple IPO price at the time, it was $22 in 1980. But if you account for the splits in today's Apple price, that comes out to like 10 cents. And I got that number from the Apple investor relations page. Right? One share of Apple stock. Aaron Breed did not
This
win
guy,
again.
man, what the hell?
He didn't win again. He did not win again. He didn't.
I'm the undefeated trivia champion of the world.
Thank you for the money, AB.
Wait.
Thank you, Enver.
How did you do? You did not win.
Thank you.
How
Enver,
did you do that?
for putting together?
So I don't understand what this means though. How is his winner score calculated? Do we even know?
I will say.
What is that? What is 310.6? What does that even
I don't
mean?
know, but on the last question, or like 2 questions ago, it gave me more points than someone else who had a closer answer than I was. So
Okay. The questions were fun. The software appears to be a little bit janky. We will get that fixed, hopefully, or not. So the logic behind those questions was, do not get bogged down by the short term. Okay, the S&P is down what 16? What was the answer? 16% this year, or no? Yeah, something like that. But on average, it rises 10.5% over the last 100 years per year.
it's not bad.
That's not bad. Of course, no year is average. That's the point of an average. Is no year ends up being the average. I wonder how many years the S&P actually closed up 10.5%. It's probably very few, right? It'll be above that. It'll be below that. It'll go up. It'll go down. But it all come out to 10%. That's what the average is. And ExxonMobil, if you're buying ExxonMobil right now thinking, oh, what a great stock. How could I have not owned this for the last 20 years? Because it has not been a great stock for the last 20 years. It's a great stock right now, but great stocks change all the time.
Spence, we got any big earnings tonight?
So many.
Really?
Disney, which, by the way, hold on. I know I'd said that we would stream the Disney earnings call, but what time is that at? Because I got to get out of here and catch my flight. So I don't know if I can hang out and do the Disney call tonight.
This will be interesting.
Oh, it's at 4. It's early. The call is at 4:30. Okay, we can do that. All right. So the call starts at 4:30. So we will do the Disney earnings call tonight. Let's get that off the screen. Disney reports tonight. So we'll stream that on youtube.com/Benzinga. If you want to come hang out and watch Bob Chapek try to, I don't know, try to make everybody happy when everyone's mad at Disney. Expectations for this report obviously are low. Although I would note that the non-Netflix streamers all gained subscribers last quarter.
That's what I think will be really
HBO,
interesting.
Peacock, Paramount Plus. So Disney Plus is probably going to gain subscribers. It wouldn't shock me, though, if their subscriber growth goes down. And the fact that China has been locked down for a couple months means the expectations for parks are going to be low as well. Expectations are very low for this report. I think, honestly, and I say this as a Disney shareholder, it is more likely than not that Disney falls below $100 tomorrow. In fact, I'm pretty confident that Disney will fall below $100 tomorrow. It's only at 106.
What Okay. Is Netflix actively losing subscribers? Is that what they said last?
That's what they said last quarter.
What
In their earnings, yes, for last quarter, their subscribers went down. It wasn't that their subscriber growth went down; it was a total subscribers went down. They didn't grow. It was in the negative.
Okay, so let's say.
Yeah, today we had our first real argument on pre-market prep in quite some time over
Really?
Disney. All right, Disney is just one of many reports tonight. We have Rivian. Speaking of low expectations, Rivian, in light of what another EV maker said yesterday, Go EV, said that they may not be able to survive as a company. In light of Ford selling 8 million of their shares, the bar is low, extremely low for Rivian. But like with Disney, it's probable that the stock goes lower.
I don't think the parks resorts is going to be as important to the Disney earnings as the streaming will be. I think if Disney is able to show, because I think that's expected. I think it's expected that the street knows that Disney World's been open 100% and been packed, and they're also going to say, yeah, but we've had rising costs to operating the park. So that means paying higher wages for labor or inflated costs of goods coming in, right? Like food they're buying to sell there, that those prices are going to increase. So the parks to me might all be a wash, right? They're going to say like they're a lot busier this year than they were last year. Yeah, no shit. No shit.
Of course they're going to say
exactly. Like no shit. And they're also going to say there has been some rising costs in operating the park. So I think that it's going to be a kind of a wash there. And then on the digital streaming front, it's going to be it's going to be like, okay, this is growing, taking market share away from Netflix, very sexy, or this is like Netflix, like just a lot of growth during COVID and it's falling. So that's my prediction. I doubt that, Daniel, because honestly, maybe there are a lot of people that like would have gone to Disney World but think about it, a lot of that's happened this past quarter, throughout the last 3 months. It won't be reflected in the company's earnings from the previous quarter.
True.
With that said, yeah, there are probably a decent amount of people out there that said they weren't going to go to the Disney parks this year. Maybe they canceled their Disney Plus subscription. I just don't know from a high level how much. How many other companies have gotten? People said the NFL was going to have trouble because people were boycotting the NFL. It's like Disney and the NFL are on the same level of just like, yeah, right. Like, what are you gonna do? You really think Ben Shapiro's
his kids don't want to go to Disney World?
No, Ben Shapiro announced he was putting like a bunch, like $200 million into a film studio to compete with Disney.
Oh, okay.
He was like, we're gonna give the kids options to. Yeah, Daniel,
good luck with that.
I'm saying maybe. I agree with you. Maybe they will, maybe they won't. I don't think long term it's a problem for Disney, but it won't be reflected in this company's earnings unless they give guidance based on that. Unless Bob Chapek, what's his name? Chapek says, yeah, things were pretty good, but next quarter will be a little tough for us because we went woke and we might go broke. Like, I don't think he's going to say that, but if he does, that'd be bad for the stock.
That'd be crazy.
But yeah, what's the long term? You really think Ben Shapiro's film studio is going to be able to compete with Disney in terms of kids movies?
No. So leading into these earnings reports, I like to give you guys like some numbers on the estimates, right? Like I'd like to tell you what the revenue estimate is, the EPS or Disney Plus subscribers, what the street is expecting. I'm not going to do that right now because frankly, I don't think it matters. I don't know if there's anything Disney can say tonight that would make the stock go higher. I really don't.
I disagree.
Short of Disney Plus. Wait, how many subscribers Disney Plus have? I gotta look that up real fast.
Well, that's what I was gonna say.
All right. So Disney Plus had, as of the end of the year, 100 and we'll just round up. We'll call it 130 million subscribers. Short of short of Disney saying that they went from 130 to 200 million in one quarter. Short of that, I think there's basically nothing they could say that would make the stock go higher. The sentiment is so bad for the overall market that they will. Wall Street will find any reason to sell this stock tonight and tomorrow. So
Wait, can we get the? Sorry, I spaced out. I was reading something else. You said that the only way Disney stock is going to move higher is if Disney Plus blows it out of the water.
If Disney Plus like doubles their subscriber base like last quarter, which is not going to happen.
Shut up.
It's not going to happen.
No, they don't need to do that. They just if Disney Plus grew the last quarter by a significant amount more than expected, doesn't mean double their sub base in one quarter. It will. I think the stock will trade higher.
I think there's nothing they can say.
Can I get the wait? Actually, before we do it, I got to get my screen shared real quick. Can we get the Spencer? Can I get the breaking news graphic?
Oh yeah, I meant to do that this morning for the CPI and I totally forgot. Anyway.
Breaking news.
Talking about Terra?
No, what happened?
All right, sorry, keep going.
Kathy Wood was right about deflation. Jerome Powell was right. Inflation was transitory.
Why?
The price of a Nintendo Switch has dropped.
Oh, now they tell me.
In the U.S.
Do you know how long I had to wait to get a Switch in 2020? Like 6 months.
There you go. Inflation dead. No more. Price of a Switch has dropped.
Does it say by how much?
I don't know. We could click the link and find out.
Okay. I got to say, buying that Switch, that was the first system that I'd ever bought as an adult. No, second. First one that I bought in 10 years. It's awesome. I play like, I don't know, once or twice a month. I love my Switch.
Oh, new special at Masked Singer tonight. Have you ever watched that?
Yes, and I don't care. Wait, where was I going with that? No, there was other breaking news too. Tether just lost its
peg again.
Its peg.
Wait, how? I don't understand this part of it. How does it keeps finding its peg and then losing it again?
No, this is Tether. This is a different. This is not Luna. This is not UST. I don't know how to find it in Pro though. Shoot.
Yeah, Bitcoin's kind of moving lower off of it as well.
I don't know what the Tether symbol is in Pro.
I'm gonna short Bitcoin.
But I just saw that. How do you do
that? You can do it on Kraken.
You do it with the futures. If you have a futures account, you can short Bitcoin futures.
How do I trade?
Wait, no, I just saw though that Tether lost its peg. It's down to $96.
How do I do this?
Hold on.
Can someone figure out how to buy puts on Bitto?
USDT.
I could buy puts on like MSTR too, probably.
Well, that's not shorting Bitcoin. That's not the same.
It kinda is.
It's not. It's not. You want to buy puts on a Bitcoin miner? That you're going to short a miner. That's not the same as shorting Bitcoin.
Yeah, but like MicroStrategy goes up.
Why is my chart sucking right now?
It's shorting. Can I buy Bitto puts?
BITO. No, I saw a thing about USDT losing it. But I don't have my chart's not working for me, so it doesn't matter.
Tether had lost its peg a while. Tether lost its peg before.
Yeah, I know, but then it got it back, right?
UST did. Yeah, I know. I'm just saying it was. People were acting like the whole thing was like unprecedented. Like, we've seen a stable coin lose its peg before, and it didn't really have like.
All right, it's only down to 99 cents. It's down a cent.
Tumultuous impact.
Yeah, it's down 1 cent.
How's USDC doing though?
So I lost it, but only by a cent. So not really that big. I guess not that big a deal in the grand scheme of things. Wait, where's Nick Chahine? Let me shoot him a note right now. I hope he's. I'm gonna meet Nick. I'm excited to meet Nick. I've never met Nick in person before.
So is buying puts on BITO my best way to short Bitcoin?
You mean the easiest way?
Yeah.
Probably.
I think I can do it on FTX with leverage.
No, please. I would say buying.
Oh my God! Holy I gotta get these puts in. They're going up.
Buying puts on BITO is probably the easiest way to do it.
Okay.
That's the Bitcoin futures ETF.
All right, I'm in. If shit hits the fan tonight, I've got my puts.
I just got a PR pitch for the top summer vacation destination this summer. Do you guys want to know what it is? According to this report from Expedia in this press release, it's Bryson City, North Carolina.
What the heck is that?
Where is Bryson City, North Carolina? That is, per Expedia, the number one summer vacation destination this summer in the U.S. I should specify.
How can that
in
be
the
true
US.
if I've literally never heard of it?
I don't know. I'm just reading from the thing.
Bryson City. I'm gonna look it up.
If it's near Asheville, I'll be in Asheville in November. So maybe I can stop by
Asheville and when?
November, which is not the summer.
For what, a wedding?
No, I have a bachelor party.
So kind of a wedding.
Kind of. Well, no, not really.
Wedding related. Wedding adjacent. It's near Asheville. It's not super close.
It's where Great Smoky Mountains National Park is, apparently.
That's pretty cool.
All right. Today we all learned something. Bryson City, North Carolina. Check out the Airbnbs on there. All right. I don't know where Nick Chahine is. He's supposed to be coming on today at 1:00. He's probably just busy preparing for Friday. Because Nick Chahine is going to be one of the stars of the FinTwit conference. And if you're not going to be there, I'm sorry. Always sad to miss you, but I'm very much looking forward to meeting everyone tomorrow and the next day and the next day. It's going to be a ton of fun.
All right. Let's see what else is going on in the financial world.
Well, let's just pull up the Qs right now. Because somebody said something earlier about the Qs. So let me just get that up right now on the screen. We didn't talk inflation at all, but it wasn't a great number. New low of the day. We're breaking down. Why is it called FinTwit? FinTwit is short for financial Twitter, which is just a generic term for people talking about the market on the internet. Q's new low of the day. Break it down here. SPY, what say you? Not quite. Not quite. We are holding on. What was that low this morning in the SPY? 394. We're holding. We're holding for the moment. What else do we have going on out there? Let's check the scanner tool. Oh, I didn't finish going over earnings tonight. So Disney, Rivian, Bumble, Beyond Meat. Oh my gosh, I could not be more bearish in stock right now than I am Beyond Meat. Can you look up the puts for me?
On what?
Beyond Meat.
What kind of puts do you want?
$26. $22.
You want $22 puts that expire when?
This week or next?
Next week, I can get you 22.5 for $2.07. Your break even there is down another 22% from here.
Yeah.
They're expensive. A lot of
yeah.
IV baked into them.
I know.
Stock's been volatile. Well, actually, not really volatile. It's just been going down.
All right.
Volatility. When people talk about volatility, you need movements to both sides. If someone's just moving 3% down every day, it's not really that volatile.
Yeah. That's why I don't. That's why I don't do the yellow options, because I can't get over the cost of these things. Whenever I want to do it, I'm one of like a bajillion people.
So I'm reading this article about how Josh Hawley, who's from Missouri, is trying to take on Disney. They're using a picture from Mizzou, but he said he has a quote saying,
"You can take on Disney all you want.
It's
a free country."
He has a quote. He said, "The age of Republican handouts to big business is over." Hawley said.
All right.
Like, well, tell that to everyone else.
Good luck with that.
Yeah, exactly. That's kind of like what the whole model's been built on the past like 20 years is not just for Republicans, for Democrats too. Just taking in a bunch of. Do you know Sam Bankman-Fried is the biggest donor to the Democratic Party?
No, I didn't.
But then he had then like 5 other FTX executives are huge donors to Republican candidates. So they've just got it all covered from both angles.
So you play both sides. You're guaranteed to win.
Exactly. You
All
got to
right.
play both sides.
All right. Wait. So Beyond Meat, ZipRecruiter, Sonos, which is my mortal enemy of a company, Dutch Brothers. Hey, how's Bros doing? BROS.
Happy. That could be a good article.
What?
So we only learned of that short position. When was that? 2 weeks ago, when Elon Musk put those texts out between him and Bill Gates. But we could surmise from if we assumed, like if we gave it a range, like when Bill Gates put this $500 million short position on Tesla.
Well, how do we know that? We don't know that.
Well, I'm saying if you could give it like a range, right? You could look at Teslas. You could say, okay, well, if he shorted it here, he's probably made around, like we could ballpark it, I'm saying. Because we know when the text came out that.
Okay. I'm with you. I'll be right back, guys. My allergies are
Yeah,
killing me here. I gotta blow
take
my
your
nose real
time.
fast.
Take your time. All right, y'all. Let me know what trades you guys are watching. I gave mine. I just bought a couple very, very cheap BITO puts that expire this Friday, just in case shit kind of hits the fan with Bitcoin and all these coins losing their peg is enough for Bitcoin to continue to drop. But I'm curious about other trades. I mean, we really the only trade ideas we've gone over so far today. We got the couple from my buddy, the Square and Twilio, and I do want to talk about that because out of all the, we all know that tech's been getting just absolutely beat up. But and I think my buddy's point, the one that he was talking about these companies, is there's some companies that are kind of right below the mega companies, the mega caps, that you might have a little bit more of a potential for like a great return from, right? Your Twilios, your Squares. I don't know. I mean, I feel more comfortable buying Apple or one of those companies here right now than one of the smaller mid caps. But I like to his point, you do kind of get so a chance for some good return.
What was the idea? Sorry,
I was saying basically the only trade ideas we've gone over today.
Yeah.
Were my buddies that he called in buying Twilio and buying Square.
Okay, so here's my generic trade idea for today, and it applies to every day, right? One is if you're talking about investing, just buy the overall market, and for short-term trades, even though I just said I didn't want to do the Beyond Meat thing, it's too expensive. But I mean, let's be honest. If you put a bearish trade on right now, the odds are you'll be right. If you're a short-term bearish trade, you'll probably just be. I'm making a generalization here, but again, we're in a correction. All right, serious drawdown right now. So odds are you'll be okay. Control your risk as always. But any stock doesn't matter. Like if you're making a bearish bet, you'll probably be fine. Whether it's a bearish put spread or whatever it is, in the short term, if you bet on downside, you'll probably be okay. And if you bet on upside in the long term, you'll also probably be okay. That's my take here, and I'm sticking to it. If you think the pain is over, you're probably wrong.
Can you pull up the ruble to US dollar chart for me real quick? Is that on Pro? If not, I can pull it up.
I don't think it's on Pro. No.
All right, here.
Wait, and while you were doing that, I had a thing I wanted to say as well, but I forget what it was. Shoot, I had something to say just now. Oh
All right,
yeah, I remember what it was. I'll wait till you're done.
where do you think?
The Russian ruble is it's up. It's up since the start of the war.
How is it possible?
It was up a couple weeks ago.
I know. I just don't understand.
I don't know. Makes no sense.
From its bottom, the ruble is up now more than 100%. Pre-COVID, or not pre-COVID,
Pre-war.
pre-war, it's up more than 10% pre-war. Or wasn't it at one point like they were offering like 20% interest rate returns on?
Yeah.
That's like the best investment you could have made in this
Yeah.
environment.
Yeah. Oh, the irony.
Oh, the irony.
You want a safe haven? Invest in Russia.
Invest into the ruble.
Safe haven.
When that happened, when they offered 20%, I was like, that's attractive. Like it's either gonna default and go to zero and you lose all your money, or you got a free 20%. I mean, I would take if someone offered me 20% guaranteed on anything right now, I'd take it.
Hey, what's that? What's the big Russian stock? Everyone, the Amazon of Russia, the e-commerce one.
Ozone, ticker OZON.
OZON. Thank you. Did that ever reopen?
I don't know. Did that
No, it
RSX
didn't.
ever
No,
reopen?
RSX never reopened. No. Guess who has RSX? Yeah, I know you do, Shelly. We talked about I-bonds yesterday. One of the things we didn't mention with regards to I-bonds, though, is what a pain in the ass it is. It is such a pain in the ass to buy I-bonds.
It's not even worth wasting any more of our time talking about I-bonds. Yes, I-bonds are great this year, but even this year, and they're the best year ever. The most you can make off of them are $1,000 for. You can only buy $10,000 of them.
It's easier to buy Bitcoin than it is to buy I-bonds. It's easier to buy Obama, whatever that shitty coin is, that Obama, Trump, Power Rangers coin, Pokemon coin, whatever that coin.
I wonder how that one's
It's
doing.
easier to buy that than it is to buy I-bonds. TreasuryDirect.gov, figure it out for yourself. I've had enough. I literally can't. I've tried it. I'm like over 3. Every time I try to do it, something happens. Like the website fails, or it doesn't take a form, or something dumb. It's stupid. Okay, I'm pissed off about it. Anyway, what else here? I thought Nick Chahine will be on. Apparently not, but Jesse Kaylor will be on with us.
Daniel
and
said it was easy for me.
that's great. You want to do it for me too? Can I just give you all my stuff and you can just sign me up? I'll give you. How about this? I'll give you my money, and I will trust you with it.
I think some areas that could be worth looking at.
I'm all about like physical space right now, like the physical stuff,
Not the metaverse.
not tech. I'm all about like industrial.
Who did well in 07, 08? Anyone?
Yeah.
Michael Burry? No, I'm saying like what companies like did well? I'm sure like relatively like Coca-Cola like did fine. Philip Morris probably did fine. People were smoking cigs.
I don't know. I'm googling.
Because I would buy some of those names right now, Spencer, and say like, well, everything else is underperforming anyway. I'll just grab some of these names that I'm protected against the downside.
Oh, I bet you like a Dollar Tree, or like which is the good one? Is it Dollar Tree or Dollar? No, Dollar Tree is the good one. Let's look at that, isn't it? There's DLTR.
Dude, do you know there are more? Like the stats about the.
Oh yeah, wait, look at DLTR. Look at this. It went from in August of 07, it was $14, and the low 8 months later was, I guess it still went to 8.
It still dropped 50%.
Yeah, it still, but
there are more dollar stores in America than McDonald's. There's some like crazy stats about how many Dollar Trees there are, especially in more kind of like rural parts of the United States.
Yeah,
a lot of
crazy.
people rely on like dollar stores as their kind of like go-to for like everything, even grocery shopping. I've bought dinner from a dollar store before too.
Lucha, I wish. Can we get Lucha Kobe on? Lucha Kobe buys his groceries at the dollar store, doesn't he?
I think yeah.
Or 7-Eleven.
I think like some of them. I don't know. Well, Luke, I don't think that. I don't know.
You don't want to speak for Luke.
I don't want to speak for
All
Luke.
right. I haven't been to a dollar store in a very, very long time.
I would go in college sometimes just because like you can always find like if I needed like notebooks or something, like they have them in there, and it's like either that or go to the like university bookstore where they're like $15, and it's like, well, that's easy.
Yep.
Yeah, dollar store. Well, even like when I went to it, that's one thing. Whoa. Oh, okay. Yeah, that's one thing people have been like talking about with inflation. Like, oh, the dollar store is not even $1 anymore. I mean, even when I would go to the dollar store like 5 years ago, you could find stuff that wasn't $1.
Yep.
Buy McDonald's stock. People cannot afford groceries.
No, dude, restaurants scare me as an investment, not like in life. I mean, I'm not afraid of restaurants. That'd be weird if I was. I'm afraid of restaurants as an investment though, because they're having a really hard time keeping workers. There's a massive worker shortage on the low end of the wage scale, right? Combine that with the fact that input costs are going up across the board. It costs more money to buy everything. I don't want any part of any restaurant stock. I don't care if it's a high end, like a J. Alexander's, or a low end like McDonald's. Don't care. You know what I would invest in if I could, but I can't because it's private. If there's one private company I would invest in, no, sorry, two. One is Wawa, which is a East Coast, Northeast convenience store chain. That's my favorite place in the world. And two is whoever owns Unreal Engine. I forget the name of the company.
Owns what?
Unreal Engine. The
Epic Games.
Epic Games. Thank you.
Those would be your private companies that you.
I think Unreal Engine is owned by Tencent, which I guess you could buy Tencent.
I think Epic Games is, or I think Tencent owns at
yeah,
least a large stake.
Tencent owns a stake in Epic Games. I would buy Epic Games and I would buy Wawa.
Haven't we had this conversation on the show before?
About Wawa?
No, just about like what private companies we would invest in.
There are some not bad ideas here. Trader Joe's, Chick-fil-A. I don't know. Again, Chick-fil-A.
Chick-fil-A.
Again, no restaurants for me.
The founder made his son promise, like, while he was dying, that
not
he would to take it public.
All right.
So I don't think Chick-fil-A will ever go public, but it would be. I think that stock would do pretty well. Probably the first thing that would happen when they take it public would be like, yep, you guys are opening on Sunday, so we're taking a shareholder vote.
Gotta increase that shareholder value. Gotta open on Sundays.
Exactly. That'd be the easiest thing. You buy the stock on IPO. The next day they announce it, it's up 20%. Up a seventh.
It's up. Yeah.
14.
It's up whatever 1/7.
1/7 is. Or maybe more, because maybe like Saturday is busier for them than a weekday is. I don't know.
Yeah, I don't know.
Best private company.
SpaceX would be awesome. Cam says, I don't know.
That you wish went public.
It's already got a crazy valuation. Chris Catchy has some ideas
here. Yeah. Mars Company is a great one. They have so many brands like under their brand as well.
Mars is the candy, right?
Yeah.
Like Mars bars?
M&Ms. Like there's so many, but it's like have you seen the graphic that shows all the brands, like what companies they're under? There's Mars, there's actually like a lot under, and they're all mostly like candy brands, but that's a staple.
Well, all right. Since we're on the topic of candy, let's go to the one candy stock that I know.
Hershey?
Yeah.
Tootsie Roll?
All-time high? Oh, I guess you're right.
Twink?
I was afraid about Tootsie Rolls. All-time high? We're right there. I mean, sure, why not buy chocolate during a recession?
There are other rental car companies on the market, but Enterprise is not. It's the biggest. So I know a lot of people want to see Enterprise go public.
I'll pass.
Publix?
Yeah, Publix has a similar cult following to Wawa. People love Publix.
People do love Publix. I love Publix.
Yeah,
what about
Publix
Cargill?
What is Cargill? What is it?
Fertilizer? Something like that.
They're not public?
Cargill manufactures and distributes agricultural products and provides risk management and commodity.
Are you sure they're not public?
Trading services. I don't know. I'm reading an article that says.
they're not. Wow.
Oh,
All right.
also I'm reading an article from 2012, so they easily could have gone.
Dear Lord. All right. How's
One of the companies on here,
Mondelez. Oh.
The Bottom Line. This says Facebook may be the hottest private company to go public in 2012, but there are many more investors wish would file for an IPO. No, I saw people talking about this exact thing on Twitter the other day. I don't know. Chick-fil-A, I think, is the biggest one that people would love to see go private or go public, which I just don't think it'll happen.
No.
I
I was so disappointed. I was gonna go to Chick-fil-A on Sunday when I got back from the airport.
Oh, why is there
Or
a Chick-fil-A near the airport?
I learned that there's a second Chick-fil-A now. There was always Detroit Airport has 2 terminals. There was always a Chick-fil-A in one and not the other, and now there's a Chick-fil-A in both. And I walked past it on Thursday, and I was like, all right, well, I'll just get it on the way back when I land. And I landed on Sunday, and I forgot that they're closed. My life is sad. All right, real fast before we bring on Jesse Kaylor from Elite Trading, let's just do a real quick crypto update. We have not looked at the heat map. Yeah, it shouldn't be a surprise, right, guys, to see this red across the board. You know what's scary is that how long was Terra up here? Because this is what the top 20 largest cryptos by market cap. It's off the map now. It's literally off the map. Holy, is that right? Solana's at $51.
What was it at?
Like 90? Like a couple of days ago? Holy crap.
Jeez. Oh my God. Bitcoin just fell below 30.
Wait, hold on a second. So I bought like just a little bit of Solana. Oh my God, it's crashing. I did not realize this. Dear Lord. Good thing I didn't buy more.
All right, guys. This is actually like if
Holy cow. What is happening out there?
I'm set. What is the what's
Solana was last week. It was $90. It's $51 today.
what was like the system they used to rate the level of like threat during the Cold War?
Like you're talking about like DEFCON? Like
Yeah.
DEFCON 1 is the highest.
Highest. I'm going DEFCON 1 if Bitcoin drops below its previous low of the day today. So I saw someone else. I don't know if they're in the chat still. Someone in the chat said 28.
They'd back up the truck.
28 was like their level, but then I look at the Bitcoin chart and I don't see any support like anywhere until let me look.
Dude, this is crazy.
I don't see any support at 28. I see some support maybe at like 20. And maybe it's not even good support.
All right, well, look, if for whatever reason you want to buy this dip.
Oh, wait.
What?
I just funny. I was saying that like, right before you're about to read the ad read to buy some Bitcoin.
Yeah, if you want to buy this dip for whatever reason, I mean, you might as well get it for free, right? Look, free Bitcoin, free of anything, never goes down in value because you got it for free. You didn't even have to pay for it. So use that code ZING. It's on the screen there. Dear Lordy. What a. Yeah, well, I mean, what a dip. So Bitcoin now what? 29.9.
Oh, you know there's an actual convention called DEFCON. DEFCON is one of the world's largest and most notable hacker conventions held annually in Las Vegas. Actually sounds really cool.
When is it? Can we go?
No. Well, I mean, we could go. It's not there. We should also do, that'd be really funny. If we found like, because Las Vegas always has a bunch of conventions going on. We found like another one to kind of crash while we were there. I don't think we'll have time.
We won't have time.
That'd be funny. Wow, that's crazy. I saw you know the thing that you like to do, Spencer, where you run a screener and look for companies trading like at or near their highs.
I do it all. I do that probably like 2 times a week.
Are there any there?
I don't know. Let's see.
Because one that I like right now is Olin, which is near its highs. It's a St. Louis company. Very, very, very much a value stock, which is like out of my
Area of expertise.
out of my area of expertise, but Olin like owns and operates a few different businesses.
Ooh.
One of them being
We got a few healthcare stocks that are trading near their 52-week high.
yeah, and I was gonna say that too. That's what I was gonna say before I asked you like what did well in 07, 08. I was gonna say healthcare stocks like United Healthcare.
It's a staple, man. People need their
healthcare.
they need
But
their
I will
drugs.
say like there will be a lot of if we do get a downturn in the economy, recession, won't there be a lot of people who like would have gotten some elective surgery that they won't get anymore? Or...
So yeah, so the problem is like in theory, right? The quote unquote defensive sectors like healthcare and consumer staples and utilities should outperform in theory. And then the reality is that in recessions and bear markets, correlations go to 1 and everything just moves together. So is it possible that you lose less money owning healthcare stocks or utility stocks or consumer staples than you would if you owned like tech in a crash? Yeah, you might lose less money, but you're still going to lose money, right? That's the unfortunate part of it. But anyway,
but yeah, so Olin,
well, do we have a ticker on that?
yeah, OLIN.
All right, what does this company do?
No,
That's not
that
it.
is not it.
That
OLIN.
That ain't it. That ain't it. That's it.
Oh wait, the ticker is just OLN.
No. Oh, yeah. Apparently.
Sorry, I thought the ticker was OLIN.
Aha.
So this is trading at/near its highs. It's very much a value play, which, like I mentioned, is out of my area of expertise. But look, a lot of stocks are cheap right now. 6 PE, fine, okay. 1.34 dividend yield, nothing crazy, but hey, at least it's something. But here's why I'm looking at it right now. So Olin Corp engages in manufacturing of chemical products. It operates through the following segments: chlor-alkali products and vinyls, epoxy, and Winchester. The chlor-alkali products and vinyl segments manufactures and sells chlorine, caustic soda, ethylene dichloride, and vinyl chloride. I don't know.
I don't know what those words mean.
I don't know what that even means either, but it sounds like they sell some like chemicals for people's pools and shit. Chances are, if you have a pool, if you got money, you're not gonna just stop buying that shit for the pool. But here's the other reason that I like this company. The Winchester segment produces and sells sporting ammunition, reloading components, small caliber military ammunition and components, and industrial cartridges. I think anytime in times of uncertainty, there's one thing Americans will do, and that is go buy ammo and guns.
Go. Hey, how's God, what? Give me the ticker now.
Smith and Wesson?
SWBI. SWBI. How are we looking? Oh no. How about RGR? Give me RGR. No,
These things aren't doing well right now, but I'm playing this as more of like a if shit hits the fan. I mean, think about it.
Maybe.
Who's a guru? Me, Shelly?
No, she's saying guns. What?
Oh.
Do you need glasses?
Oh.
You want to put those glasses
Maybe I
back
do need
on?
glasses. I can like see it. Just look.
All right, wait. Let's bring Jesse Kaylor on, and we can talk about this with him too. Our first guest of the day, real guest, scheduled guest of the day. Yo, Jesse Kaylor, what's up, man?
Hey, what's up? I'm back in action. I've survived the stomach virus, the extremely sprained ankle. I'm hobbling around.
I don't understand that. You sprained your ankle pretty badly, and then you couldn't trade on a sprained ankle. Is that
Hey! I got your little snazzy text the other day, but I said, look, okay, I was resting. I didn't want to get out of bed and stare at a screen with my foot and the blood flow. You know, I was like,
it's all about the blood flow.
You got to keep it above the heart, and it's kind of hard, doing that with the laptop and screens.
All right.
No, I took a break. It was a good break. I'm glad I did. I'm glad I was not a part of this bloodbath, because I went from like 26% cash to like 68% cash. And
gee, dear lordy.
Yeah, I know. Everyone's like, why?
That's a lot of cash.
It's a lot of cash, but I also, have made some it says my cam looks like I'm in a horror movie. Oh no, because I don't have any light. I just realized I didn't have any lights on in here. But anyway, Yeah, basically, I don't know where I was at when I just read that. It made me laugh. It made me laugh reading that. So I'm trying to turn the
Wait,
lights on.
why so much cash?
Oh yeah, basically just because I've got some projects that are going on with my my life outside of trading. So I also wanted to take off some risk because I was jumping into some life risk with some new positions and doing some new work. I'm taking on a new position, which I don't want to blab about on here, but other than that, trading wise, I found one stock that I liked, and I hit my stop loss, so it didn't like me as much as I liked it. It was GIL, the Gildan Activewear Inc. company. I really like GIL. I was excited about this nice little pullback we've gotten recently, but then the whole market decided to take a dump, so that didn't really help my trade there. So other than that, I took a little flyer today. I only bought like 1,000 shares. And I made like 10 cents per share on one of the tickers that was flying today. It was before it got halted. I can't even remember what it is. I was picking up or dropping the kids off at school before I came on today, and one of those days where the phone died, all that stuff.
Wait, Aaron, you know what we forgot to talk about was Callaway.
Oh, Callaway's a good one.
Callaway's up ripping today. Up 12%, which is a whopping $2.26. But I guess was it their earnings? Is that what it was?
But just for some context, over the last week, the stock is still down more than 5%. So yeah, Callaway they beat their EPS, beat revenue, quoted strong top golf growth, which of course Callaway bought kind of at the beginning of COVID at a big discount. And here's what I think is actually crazy, Spencer. And if we zoom out on this chart, if you can give me
I can zoom.
a weekly chart and go back to the COVID levels,
Yeah.
We're lower than we were pre-COVID for Callaway.
Yes, we are.
And during COVID, we saw the biggest increase of new golfers since Tiger Woods. So when Tiger Woods came on the scene in 2000, 1997, actually, when he won the Masters, was the biggest kind of increase of new golfers because everyone was like, oh, wait, that's actually kind of cool. Like, this isn't just for...
He's not that good. I could beat him. Is that what they were saying?
No, that's not what they were saying. Right. They were saying, like, oh, I thought golf was only for, like, grandpas and old people. This young guy who's, like, kind of ripped is, like... Actually, he was skinny back then. This young guy is, like, pretty good, so they went out and golfing. That doesn't make too much sense to me, the fact that Callaway's golf stock is lower than it was pre-COVID when you have this huge tailwind, other than the fact that just the stock market has been so weak. And people just don't really want to hold equities right now. I do think Callaway is a good stock to own long-term from here. I'm not convinced that this earnings report is going to be like the bottom for it. I mean, look, you can see right there. That's since last June, this thing has been in a downturn. That's 11 months. This trend is established. It's not, so the trend is your friend. It's still in a downtrend. I'm not saying like, here's the bottom. I'm saying long-term, I think a lot of the people that started golfing during COVID are still golfers. They're still going to be buying new equipment. And then, of course, Callaway has the issues that everyone else has with rising production costs, supply chain, taking longer to get some
steel prices.
Steel price, yeah, all of that stuff.
Aluminum.
But in
Titanium.
in this environment where they were able to get a great earnings report, I think it's a good sign for the company. I'm bullish the golf space. But
Apple's taking a bloodbath, 147.71, 69. Just they are shitting the bed is what some would say.
Wow.
What about
it's Bitcoin a good thing.
Here?
So real quick, this is an option strategy. These are some strategies that I would at least want to talk about real quick since we are talking about some trading. So a lot of people were asking, like, how can you hedge against these positions? Like right now, if you're holding 1,000 shares or 100 shares of Apple or something of that nature, and no one said it earlier, there's a very simple way, and you sell yourself some covered calls and try to make back some of that profit that you're losing or some of that loss that you're in right now. And you can do this very simply with these bigger companies or like SPY, Apple, Netflix, Tesla. They have weekly options, and you're on a Wednesday, you've got 2 days. A member of our group sold 55 415 calls for SPY that expire today. So he's going to make close. What is that? $600 or so in a day off of a trade that probably. I mean, does anyone in this room or on this show think that SPY is going to be at 415 by the end of the day?
We've got 2 hours, 18 minutes. Never say never.
It needs
But
to
no, I
jump
don't.
$20.
I don't think so.
I mean, so there is a lot of premium. Even when you wake up and see, there's a lot of times where people go, how are my calls up? I think I read it in the chat. They said my calls were up and the stock was down. And it's due to extreme volatility, implied volatility, the fact that it may have went to like 150 to 140 to 145. Well, it's going to mess with those options contracts to where sometimes you can get out of a bad position just from the stock moving up away from you really fast as well. And you'll see some of these increase. So just throwing it out there. If you're sitting there and you're staring at this and you don't want to sell and you're not wanting to take a loss, then maybe selling some covered calls or some puts that are, well out of the range, which I wouldn't do right now because stocks fall quicker than they rise. So my approach, I would be selling puts that are well below where they're at when I'm wanting to be bullish the company. I want to buy the stock at that price. I'm looking at that when it's on an uptrend. So I'm selling covered calls on the downtrend on these rips. And that's just something that you might want to look into.
That's a great idea. It's a great idea.
Yeah, I think so.
Get paid.
Walk us.
Get paid.
What does someone need to do? Like, obviously, you need to have options trading on your brokerage.
You got to have enough money to cover it, or you have to have enough position to. You either have to own the shares to sell the covered call, or you have to be in a cash account, a non-cash with margin account to be able to and have enough in your account to cover that sell. It takes a lot of money to typically sell some of these bigger companies, Apple. So if you're looking at a $5,000 portfolio, you're probably not going to be able to sell some of these positions.
But if say someone owned $100 or 100 shares of the underlying asset, so SPY in this case, which I mean that
you could sell the calls against it.
That'd be a pretty big portfolio, right? Because what is SPY at right now? Like 395. So you would have like a $40,000 account if you had 100 shares of SPY. So yeah, you need a certain amount of collateral to do that, to sell those covered calls. Selling call spreads, thinking about is asking. A cheaper way. I do believe you still need some collateral. Like you can sell. You can do either a credit call spread, which is where you're getting money to put the spread. Yeah, or a debit spread where you're paying money to put the spread out there. So definitely a cheaper way to do it if you want to kind of implement some spreads.
The call spreads do limit loss. It's just you're limiting your profitability as well. There's a guy named Ben W. He has an alert channel in the Discord, that we run, and that's all he does is he puts out maybe 1 to 4 trades a day or every other day, and it's always just selling spreads against the SPY or a lot of different companies, but typically SPY and Apple and things like Microsoft.
Yeah. So, Jesse, can you do me a favor real quick? Because you're better with charts than I am. Can we pull up the Bitcoin chart? Because I was under the impression that if we fell below this support level at 30, there's not a lot of support to catch us for a while. Am I seeing that wrong? Or I'm hoping you're going to tell me I'm wrong and that we're not, blown. I think you might need to go BTC to USD or something to get to.
Yeah, I don't know why this isn't pulling up.
Maybe they don't want us to see how bad it is.
That's exactly right. They don't want to see.
Pierce over there.
Why is it not working? It's gone. It's no longer.
Bitcoin doesn't exist.
I said earlier. I was saying earlier the 30 level.
That's because I was in stock only. Here we go. There's the CME futures.
There you go. Well, wait.
Nope, that's the same thing.
No.
I was right. I was right.
Well, you can go futures, or you can. Is there a way to do the actual coin? There is. That's the futures right there. Here, I've got it up on mine. This is what
you pull it up.
All right,
15,000.
Aaron, what do you want to see?
Bitcoin going to 15,000 if it breaks this support level right now?
I'm telling you to just tell me what you think, Jesse.
I think that I would love to buy Bitcoin at 15,000, and I think there's too many people that would love to buy Bitcoin at 15,000. But the way I think about it maybe a little different than most people. So the way I see this is you have a lot of people that made a lot of money that, in my opinion, necessarily shouldn't have made that money. And that's with stocks, that's with crypto, that's with everything. There was too much money going too fast. And then everyone got excited and they bought way more, I think, is what happened. And then they all just got flushed out of there on that last pullback to 30. And then it went to 60. And they were like, man, they're like, I missed out. I should have sold at 60. I did it. And now their wives are kicking them in the ass. They're losing money. They're getting margin calls. And this thing is just going down. And that's where I think that this time it's going to 15,000 and then rallies back to 30,000. And then 60,000 is a dream for the next 10 years. Maybe 5 years. 100,000 is forever away from my opinion.
You said okay. So, but in the short term, like, are we below all these support? Like, where do you think a bounce comes in?
Right, it should probably right this second as we're speaking at these levels. I mean, if nothing happens today and this thing, you wake up tomorrow and it's down another 2,000-3,000 and it's in a 27s, it's just going to keep leaking, in my opinion.
Okay, so are you? But like,
nothing goes straight down. But I mean, I just don't see any type of. I wouldn't be buying the dip right now.
To me, and this was my. I wouldn't be either. And this was my kind of what I was talking about with Coinbase earlier, and why I didn't like the stock is like Bitcoin trading in a range isn't good for bringing like more people into it, right? You need it breaking out for people to get interested and become new investors. I mean, most people bought Bitcoin when it was above $50,000.
Yeah,
like that's when you had the height of people buying it.
The hype was real, 50 to 100.
And so literally most people, like the majority of people that have ever bought a Bitcoin are underwater.
Yep.
And the majority of people who bought it before it ever went above 16,000, they also sold out and took the profit already.
I'd hope so. But if Bitcoin, if this level right here, Jesse, where you're saying we should bounce from, and it looks like we're bouncing a little bit. We were at 29.3 like a few minutes ago. Now we're at 29.8. If we're just bouncing here though, and we're going to be like in the range between say 29 and 31, like that's still bearish to me. Even if it's not actively going down, like that's still bearish to me. The fact that it's not going up. So we'll see. I mean, I'm hoping, for everyone's sake that owns Bitcoin, that we do get a bounce, and we're at 35 tomorrow, and we're not talking about the potential for Bitcoin to crash another 30%, because I don't want to see anyone who's put their hardworking money like into this lose money. But at the end of the day, if the buyers aren't out there and people aren't buying it, I don't know how this thing comes back up.
Well, the market makers, the shorts are in control completely. I mean, they're trying to think of how I was talking to a friend. He said, what happened in 2020? I said, the market crashed so fast overnight. It created an internet buzz and it became viral.
Yep.
That became a viral catalyst for people to get into the market that have never thought about it because they never heard about it. It wasn't on their media. They didn't have Webull trying to give them free stocks. They didn't have their buddy next door saying he made $5,000 and coming home with a new Pinto. You know, there's a lot of people out there that didn't have these things happening. And then all of a sudden, all at once, everybody knew something about the stock market, or everybody was involved, or at least they were asking about it, or they're downloading an app to learn. They're wondering, maybe this is how my dad had some money. This is why he was pissed in May of this year. If you go back and look, and he was ready to kill everybody in the house, and there was no vacations and there was no fun. Well, that's where the money came from. That's where some of this old money that no one asked about, nobody cared about, because we were just living on PlayStation and Xbox and eating munchies. Nobody cared about the stock market. But then
speak for yourself, man. I was playing Switch,
okay, or Nintendo GameCube if you're my age. Yeah. But so here's where my point is that you got this flush of energy going to the market, and for a while there, yes, we were in an uptrending market for 10 years, but it was a slow grind all the way up until the last couple of years, and then you see these big spikes, these huge these percentages that never happen. Well, you know what happened is that they flipped that switch that was battling on the way up and said, you know what, let's quit fighting this. Let's just go with the trend and let's stop selling stocks. Let's just buy. And then the stocks just soared out of relativity to their actual company's worth. You know, everything is just completely was just outlandish. And then now that same switch, it went back to the down mode, and there's nobody else fighting to make it go back up anymore. Everyone's hitting that switch as well, or their stop loss are going into place, and then the sellers are coming in saying, you know what, it's time to flush these guys back to their net worth that they were originally at in 2019 as a whole. I know it's kind of like a strange theory, I guess, you know, saying that there's these people, these overhead, the Illuminati of the stock market that are saying, here's what's going to happen. We can't allow this much wealth from the commoners get into this, and keep going. They've got to stop it. They got to make everything go back down. And then now what they're going to do is not going to flush us. We're not going from 395 to 300 overnight. It's going to be $5 here, $2 there, $1 here in SPY, all the way down to where they feel comfortable that everyone's gone, and the only ones left are the ones that make it happen. The ones that are making it go down are the only players. They want to be the only players. They don't want retail players in the game.
I understand why somebody would think that, but I try to remember that there's a difference between trading and investing. And a lot of people probably thought they were pretty good at this whole trading thing in 2020, 2021. But I've never tried to beat, to cite the boogeyman, Citadel. Never tried to beat Citadel at their own game. Okay, Citadel is better at what they do than I am. Okay, the way to beat
real smart AI.
The way to beat them is very simply
join them.
Is to just diversify and buy the broad market and then kind of just never sell, right?
Yeah.
Citadel is actually a bad example because they're a market maker. But like the hedge funds, okay? The hedge funds have to answer to their investors. You only have to answer to you, right? You don't have a benchmark. You are your benchmark. Maybe a S&P, whatever. But I really, really hope that the lesson being learned here is not that the market is rigged, because
not rigged, but it's
slanted.
It is slanted with a mathematical algorithm that you can't afford, and someone else can afford this technology that you can't. It's so smart. It's so smart.
100%.
They only need one penny though. They only need to make a move.
It's not a level playing field. That doesn't mean you can't win the game.
Correct.
You can win. You can win. You can. Investing is the best way to build wealth over time.
Yes, be greedy. Right now, you should be super greedy, but your greed may be a little painful sometimes because you never know when to be greedy and when to not, and when to get in. That's why I think earlier AB mentioned, I think, what was it, 150 on Apple? You were like, if it was at 100, I could afford a lot more and buy more at 100. Right?
Well, yeah, basic math. If I had $15,000, right, I could afford more shares at 100 than 150, and then in 10 years, I'd have more shares, and I'm not going to care what they're going to be Apple shares are going to go up. Although, while we're speaking of Apple, Jesse, I've got some new breaking news. Saudi Aramco passes Apple to become the world's most valuable company at $2.5 trillion. So I was like, that to me is like ridiculous.
Who cares?
I think it's ridiculous. We're value oil and gas company is going to be is more valuable than Apple right now. Like that, I don't know. I don't really agree with that. But I saw a couple of comments in the chat about SARK. I don't know off the top of my head. Maybe someone in the chat knows. What is Kathy's actual exposure to Bitcoin? Like, does she just own Coinbase and that's it?
Yeah, I don't think she owns.
Because I know she's been a big Bitcoin bull, like calling for $500,000, all this stuff. Like, no,
I don't think they own. They own their exposure to Bitcoin is via like a Coinbase or a Tesla or et cetera, not Bitcoin itself.
I mean, ARK, like at this point, When is
Although I'm sure that if we ever got a Bitcoin ETF, like a pure, she owns GBTC. Does that count?
yeah?
All right, she owns a little teeny bit of GBTC. It's her 31st largest holding out of 50.
ARK is down. Let's see. ARKK, the flagship ARK ETF, is down nearly 10% today. And I think
Could you imagine the numbers that are going through that woman's head that she sees on a daily basis of that's just money going down the drain right now?
Yeah, and I think outflows just started.
Nah, the flows data is a few days delayed. So
are any of the stocks in her in their green?
Wait, yeah. How's Roblox doing today?
Oh, Roblox is doing well.
How's Roblox doing?
Roblox is doing well. But
Is
what?
it
Her cost basis
still?
is $80 and it's 25 right now.
Yeah, Roblox is up 5%. Go have a day, Roblox.
Yeah,
Have
and
yourself a day.
I believe in Roblox. My son, we always talk about this. This is his stock.
This doesn't look great though.
10 years from now, companies like this, I think, are going to be around still. I think this is going to be
companies like this, but not necessarily.
It may not be
just...
Roblox, but companies like. But now think about this: Activision, Blizzard, all those companies, they were nobody too.
Yep, that's true. That's true.
I mean, the Unreal Engine was made to just basically go against, like, defy like gaming at the time. I mean, back in the freaking 99 or whatever, I forget what year it was built, but it's such an old engine, and it's what everyone's using now. It's like the oldest. I know it's changed over time, but
what needs to happen for is Kathy on like leverage? Like, what would it need to happen for ARK to like blow up?
Well, because it's an ETF, like ETFs don't blow up like that.
Like, okay,
because all that would happen is they would reduce the number of shares in the market, like the ARK shares in the market.
So because she's not operating as like a traditional hedge fund, there's no risk to like actually blow up.
Well, like what she could do is she could close them if she like wanted to. She woke up one day and said, "Screw this, I'm done." She could just close the fund. ETFs close every day, and if that were to happen, you just get paid out whatever the value of your stake is.
All right, how about this? Can I ask a stupid question?
Yeah.
Is the price of ARKK, the stock, the ETF?
Yeah.
Is it more determined by the price action of its holdings or the people buying and selling the ETF?
No, the price action of its holdings, because what happens is the price of the holdings go up and down, and that messes with the quote unquote fair value of ARK shares. And so what's happening constantly is there is this constant exchange going on where people are buying all the stocks that ARK owns, and then they're going to these they're called authorized participants. They're saying, hey, look, I had these special traders. Hey, special traders, I've got all of these stocks that are in your basket. I'll just trade you them for some of your ARKK. And they can create new shares that way. They can take away shares that way. But in theory, the fund should move in lockstep with the price, the price of the holdings in the fund.
So basically, even if everyone was trying to buy it right now with it down 10%,
no, because then the market makers would keep it in line. The market makers would sell. They would start selling like crazy to keep the price in line with so even if you have like it happened, right? It happened. You had like insane buying action. Like everybody and their mother and their mother's neighbor was buying ARKK, but the price stayed in line because the market makers were selling to balance it out. Jessica Kaylor, any final thoughts for us? It's past 2:00.
Snow options. If you want to swing play overnight, you got earnings. This thing could go all the way down to $1.20 or less, in my opinion. And if you're wanting to do both ends and looking for a move, because it's been if you're looking at it the other way and you're like, it's been beaten up so bad and it's down here at the support at 134. If it holds 134 and it stays above this 134 range today, then you might get a run to like 140 on the calls. So maybe you do a little $5 up, $5 down play on options and look for that big move, one way or the other.
All right, we got to hop here. Jesse Kaylor,
Stay in the green, guys.
trading. See you later, man. Have a good one. We got to wrap as well because we got to. It's actually a replay today because Chris Catchy's still sick, but a replay of the roadmap, and then I'll be back for At the Close at 3:30. Hope nothing crazy happens until then. Smash that like button. Seriously, drop us a like. I know you'll miss us. We're on a 4-day break, Aaron. We'll be back on Monday.
Yeah, I might come online for a few minutes tomorrow. Say
Oh,
what's up. I'll be
all
in
right.
the office.
All right.
We'll see.
Smash the like. I'll see you guys in an hour and a half.
Smash that like, y'all.